Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, so in the last episode, we talked about cognitive biases. So let's talk about negative biases. How does that affect us as traders, and where does that come from?
Negative biases. Well, I think for people, considering what can go wrong is adaptive. Who's going to survive, right? Is the person like the mother who's so concerned about her child that she makes sure that, every little thing, like you grow up in the rainforest in down in South America, the mother's concerned about pythons, getting her baby, right? Mm-hmm. So she, her family, her kids are the ones that survive because the pythons never get her kids, sort of thing, right? Or what do you call Neanderthal guy who's worried about woolly mammoths trampling on his tribe or whatever? Yeah. His tribe survives. So I mean, it's adaptive in a way, like anxiety and assuming that the worst is always going to happen. To me, that's kind of like it's an adaptive thing, I guess you could argue. And so that's useful in that sense. In trading, it's a little bit different because you do need that. You need that when you're considering risk because it's a matter of risk and reward. But at the same time, I think a lot of traders, they don't get into trading thinking about that. Like I didn't get into trading considering probabilities. I really didn't. I didn't understand that until later. I got into trading thinking about the reward. I didn't think of the risk. Right? Yeah, everyone's Scrooge McDuck, right?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
I think you need that balance. I mean, you can go the other way. Like if you're too concerned about risk, I've seen that too. And those traders, what they end up doing is limiting their possibilities, right? Yeah. I'll tell you a story. Just this week, I was working with a trader and he was like showing me his strategies. He was like, look, I got this strategy, it's pretty good. I got this other strategy. Yeah, it's pretty good. I think they both work in the same type of market, like a trading market or whatever. But then I put them together and it's freaking unbelievable. I go, yeah, it is unbelievable. That looks really good. And he goes, doesn't make sense, And so he was trying to tear it down. Like he's like, I want you to show me why, when I put these two strategies together, which seem to be, they would work in the same market, why would the equity curve get so like exponentially better? I said, yeah, that's weird. I said, let's look and see if they're actually, if these two strategies are actually kind of taking the same trades. Turns out they had a 0.08 correlation. One was zigging while the other one was zagging, and that's exactly why his equity curve went straight up. And that was awesome to see. What's cool about this is he didn't just jump in like straight away and go, oh my God, I have this crazy, like I put these strategies together and I'm in the money, right? Yeah. What he did was he said, what's wrong here? What am I missing? What did I get wrong? Can you show me something? Blah, blah, blah. And I said, dude, I said, you just got to run the correlations. Like it's, what I mean? It's a question. And he's like, okay. And we we're looking at the distribution, you're looking at one, trying to put the equity curves together and see if they're actually, and I'm like, no, man, just run the correlation. Let's just see. And then we'll test it on out of sample data, make sure that, blah, blah, blah. And so, yeah, that's what he did. And like he had the right approach, he's a very data-driven dude. That's how he looks at things. And so he was like, where am I going to go wrong here? And I think that's a healthy approach, to have that negative, like skeptical kind of thing. Here's the question. You probably heard this too. People say, well, how much can I make money? How much can I make trading Forex? Like, what can I? Yeah. What they're asking you to do is they're asking you to take your limits, right? Your limitations, your beliefs, and place it into their head. like that's what they're saying. They're saying, give me the universe that I am going to live in. Like you tell me what I am going, like that's like a parent telling the kid, like, you can only have an IQ of 115. After that, I'm cutting you off, like you're on the streets or whatever. Like, that's crazy, right? It's totally crazy. But I understand, because we're taught to like accept authority, and whatever authority tells you, that's the right thing and all that stuff. So, I mean, I get it in a sense, but I think we need a healthy dose of like negative expectations, of feeling like things are going to go wrong or we're going to go wrong, especially when we're system constructing, and building that strategy and tweaking the risk and trying to figure out how much, because your biggest drawdown is always in the future, right? All that stuff is important. But if you're too far that way, I've seen that too, where traders are like I've seen guys who've been trading for decades and they go, you know what? I don't think anybody should trade. Like, what are you talking about? Like, what are you talking about? You're a trader. It's like, no. It's like, no, I don't. It's not. You know what I mean? And that they've just gone. Yeah, they've gone the other way. They've just totally gone the other way.
Yeah.
Is that what you meant by this? I just want to make sure that we're clear.
That's good.
Yeah,
that's really good. Yeah, that's interesting that you mentioned the limitations, because I've gone to a couple of presentations, obviously a lot over the years, and one guy at a meetup was saying, how much can you make trading? And he was like talking super loud, trying to be really convincing, and people threw out some numbers and he said, no, you can only make 10% a year at the most. And I was like, wow, that's really limiting people. But yeah, that was his world, but and I don't think he was trying to be negative. He was just trying to be realistic within his version of reality, but it wasn't necessarily other people's versions of reality, right? Obviously.
Yeah, I mean, obviously, like, we have Nicola in the forum, and she does way better than that, And like, there's people that are out there that it's crazy to me. Like, yeah, it's so true, man. Like that guy, he didn't mean to. I really believe the guy that you're talking about, he didn't mean to do anything to hurt people or send them the wrong way, But here's the thing. Here's a good test. If you ever see someone and they say, I'm an optimist, don't believe it. And and if they say, like, a self-proclaimed optimist, right? No, you should, like, this is my belief. If somebody is an optimist, it will be super clear. Okay, like, you will know it, right?
Yeah. I wish I started that way, but I know it wasn't possible. It wouldn't be possible, because we're always looking for that teacher or whatever to help us out, right? And
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter, somebody wrote in and they have the age-old question of, my trading sucks. What can I do to improve? Like, this guy's losing for I don't know, 3 months or whatever, lost a big chunk of his account. Where does he go from there?
Okay, first of all, do you have a system? That would be my question, right? Sorry, I jumped the gun there. So if you can't write down the conditions to an entry and the conditions to an exit of a trade, then you don't have a system, and you are flying blind, friend.
I call it the swag system. Wild ass guess.
Really? Yeah, that's it. And people ask me too, they go, have you ever just look at charts and take a trade and just kind of go off and I'm like, no, I have to have it fit into a box that I know, that has made money in the past. So so do you have a system? Number one. Number two, if you have a system, see if your entry is any good. And the way that you see if your entry is any good is whatever your entry conditions are, the indicators or the pattern or whatever, see where the market goes 3, 5, and 10 candles after your entry. That's a really good way to see if your entry rules on average suggest what's likely to happen, next. Is the market up 3 candles later after a buy signal, 5 candles later, 10 candles later? Okay, if you go through that and your signal is good, then the last thing, and probably the most important thing where the most work would be in the exit. So the easiest way for most traders to make more profit with their strategy is to simply wait for more profit. I know it sounds crazy, but like, instead of going for those 1-to-1 trades, what if you went for 3-to-1 or 4-to-1 or 5-to-1? Your win rate will typically go down, but the overall profitability usually goes up. And what I mean by that is if I have a strategy that's 1-to-1 and it has a 59% win rate, if I move that strategy to 2-to-1, maybe I don't have the 59% win rate anymore. Maybe I have a 46% or 43% win rate, but I'm actually now making more money. So every 100 trades, I have 43, let's say it's 43%. Every 100 trades, I have 43 winners, and those winners make 86 R, and then I lose 57 R. So 86 minus 57 is whatever that is, 29. Is that right? Something like that. So yeah, whatever, something like that. So I make more money than I would have if I had the 1-to-1 where I had a 59%. So that's key for a lot of traders. But you got to first make sure you have a system. First, make sure your signal's good. Then on the back end, use trailing exits, use aggressive targets, split it up, maybe go 2-to-1 and then have an aggressive trailing exit or whatever. But that's usually where you can make the most gains is on the exit. And everyone focuses on the entry. It's usually not filtering out bad trades or whatever with the entry, it's the exit, usually.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah. I actually test to see how far the price went on each trade. So I call it the max R. So like how far I would have gone if you just left it alone and you just left the stop loss there. And sometimes that can give you some good ideas of where to put your next profit target. You can see, okay, 50% of the trades went 3R, 60% went 6R or whatever it is. And you can kind of guess, not guess, but you can kind of use the data to see where you might be able to get more profits out of the trades.
Yeah. And that would work really well, like with a fixed exit, right?
Yeah.
You could, you know what I mean? Like you could say, yeah, so exactly. That's exactly right. I've been working with a trader, a really interesting guy who how he builds strategies. He's very unique because he doesn't really get stuff from other traders. He kind of just looks at the charts and comes up with ideas.
Nice.
And he's like, yeah, so well, how did you come up with this strategy? He's like, well, I just look at the charts and I look for the big moves. And then I look for like what happened before the big moves. And so what I'm trying to do is backwards engineer the big moves. Yeah, it's really cool. Yeah. I mean, I think that's something that we all do in the beginning, but then we kind of get down the rabbit hole of like stochastics and, moving averages and all that stuff. We get away from that simple approach, but it works really well for him. And I think that's, something to keep in mind, that you can, just because it's on a website doesn't mean you have to trade that way. Just because you read it in a book or whatever, like in many ways, you're better off just going your own way, using your own approach, because it's going to make sense to you and you're unlikely to throw it away.
Exactly.
It's easier to throw away someone else's idea. Yeah.
That's a good point. Yeah, I wish I started that way, but I know it wasn't possible. It wouldn't be possible because we're always looking for that teacher or whatever to help us out, right? And for good reason sometimes.
Yeah, I mean, look, people spend a lot of money on universities, right? Like, I mean, your whole life you're taught. You've got teachers from when you can start talking. So yeah, it's kind of ingrained in us. Yeah,
that's true.
Yeah.
Okay, cool. Thanks, Walter.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I would sit down with my trading buddy and we would get on Skype and we would pull up our charts and we would look at the same charts. And our question was, buy or sell? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So I got a question yesterday from a trader. And he was talking about how I said, how's your trading going? And he was saying that what he realized was that he was losing quite a bit, and he was thinking that what he needed to do was to get better at reading the markets. Basically, he's into price action, so that's kind of his approach, which is close to how near and dear to me, and I know you know a lot about it too. So what I highlighted for him is something I think that a lot of other traders could benefit from, which is this idea that a lot of times we focus on what seems to be the obvious thing, and when someone else has a look at it, sometimes you'll realize that there's a little bit more to it. And I'll give you an example. So when he said that he was consistently losing because he couldn't quite get a handle on price action, my response was, well, are you sure that that's it? Because typically, there are the three things. There's the system, there is the risk rules, and then there's you. Basically, how you interact with the system, your psychology, which is what we talk about here, right? And so he was focusing on the system and specifically the entry rules. What I said was, look, it may not be that. Like, it could be that, but it may not be that. It could be that what you find is if you do the exact same things you're doing right now, but you change your exit rules, things are getting better. It also could be if you do exactly what you're doing now, but you change your risk rules, you would be on a different path and have a different sort of a drawdown, and you won't get to those deep drawdowns that perhaps you're having right now, and that's why you're thinking, oh, it's not working, I need to quit, right?
Yeah.
So that's the thing is that, and then obviously the last bit is it could be that your relationship with the system is not, in lockstep. So like this often comes up when traders go, okay, what I want to do is trade. Okay, so what do I do? Okay, I need to find a really good system. Okay, so let's check on the internet. Okay, this one's really good. This guy's done really well with it. So I'm gonna use it because obviously it's the best thing I can find, right? So it's the best thing I can find, so let's use it. Right. Well, that's obviously, as you know, that's tricky because I didn't really build it, and I'm just using something out of the box that someone's given to me. Unless it really matches up with my beliefs about how things work in the markets, I'm not going to trade it long term. I'm going to give up on it eventually. So the reason why I bring this up is because I think as traders, we need to start thinking in these three buckets. Is it system, which is entry and exit, right? Is it me, which is how I interact with my system and my belief or confidence in my strategies, or strategies. And then finally is the risk, which is the risk kind of amplifies it and it can make my system, have higher peaks and lower drawdowns and all sorts of things when you start to get into that realm. So when you run into an issue as a trader, it may not be that you just need to change your entry. That's probably the number one first port of call for most traders is to go, oh, I need to change my entry, but it may not be that. And so I just want to talk about, I know you had some experience in this, and so what have you found in terms of that? Like when you are looking at systems and trying to diagnose, what are some of the things that you've run into?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, sure. You've covered most of it pretty well, but a couple things to add. First, I know a lot of traders think they learned the system correctly, but then when they actually go back to the educational material or whatever strategy the person was using, sometimes they notice, oh, I'm not actually following the rules. And I saw it with this guy this week. He's been posting his trades. He's been showing me what he's doing. And I can see, okay, sometimes he follows the rules, sometimes he doesn't. And he's been losing and he's frustrated, obviously. But I told him, go back, take a look at your journal, see what you're doing, and are you actually following the rules? Did you actually interpret whatever that book or that YouTube video said correctly? And if you didn't, then that's one place to start also. The second thing is, I think we really underestimate the mindset part of it. Like we don't take a look at, am I in the right state of mind when I'm trading? Do I tend to overtrade? Do I tend to undertrade? The same guy I talked to, I told him what's the difference between your back testing and your live trading, and one of the things he listed was FOMO, and that's something he didn't identify before, but it's something that's really common with a lot of traders. You want to get into the trade, you want to make $1 million right now, you just take these crappy trades. So I think those are two things that are really underestimated, but we really have to be aware of.
Yeah, it's so true, isn't it? And it's tricky because sometimes as traders we feel like really we should be pressing to trade more often, right? Because of what you said, like FOMO, right?
Yeah.
Like you're really kind of like, yeah, I need to, And I used to think of it the best way I know how to explain this is I used to think of it like I would sit down with my trading buddy and we would get on Skype and we would pull up our charts and we would look at the same charts, and our question was buy or sell. and that's not how I do it anymore, right? Like, so now my question is there a trade?
Yeah.
Right? You know what I mean? Like, it's a very different approach. So it's not always the case. If you have a low win rate, you can have the issue of not wanting to pull the trigger. But in most cases, what traders are doing, especially in the beginning, is they usually trade with a high win rate because they take quick profits. And so what they're really trying to do is trade a lot. And the question is the yen going up today or is it going down? Like, that's the question. And they're not really looking at it from a system point of view. And the other thing I want to mention is what you said to that guy is great. And one way you can quantify that about looking in your journal is scoring. So if you score your entries and score your exits, you'll actually have a quantifiable data set that you can go back and look at and say, oh, this is where it was here or it was there. And that's a really good way for you as a trader, especially if you're not something's going on, you don't know what it is, to see and zero in on, oh, it's my exits. Or it's my entries. Or if you're missing trades, that's a sign that maybe because you're at work or away from the screen or sleeping or whatever it is, that's a sign that maybe you want to adjust your time frame. Like, instead of trading the 4-hour charts and you miss 2 candles or whatever, or miss 2 candles while you're at work. And
what do you think about Monte Carlo testing?
Oh, I'm a big fan. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy, and help the obstacles that stop over 20% of traders.
All right, Hugh. You ready to go?
Yeah, let's do this.
Hey, Hugh. How's it going?
Good, Walter.
So I got... And she... in 32 trades trading the daily charts. I think she was trading kangaroo tails on the euro. Then she said, this is really, I'm pretty excited, blah, blah, blah. I'm going to start moving on to other currency pairs and do more, get more kangaroo tail under my belt and that sort of thing. And I said, yeah, that's great. There's a couple of things that I thought of when this came up. And one of them was that you hear people say you don't have enough data. Like, normally, if someone had 30 trades, people would say things like, "Oh, well, that's not enough data. You don't know if it's significant or whatever." And that can be true, right? And that's why, for example, when you see companies and they do like drug tests where they have a placebo and then the real drug, they'll have thousands of people in the study, right? And one of the reasons why that is because when you have thousands of people in the study, you have the ability to zoom in and see really little tiny effects. And like the placebo effect is well known to help like 30-something% of people, right? Just by taking a sugar pill. So they need a big sample, because if they had a small sample of 50 people in each group, they probably would find nothing. And then they spend all that money creating that drug for nothing. So they need big samples so they can zoom in and see really tiny small effects. Okay. So I said, it's great that it worked out to be 32 trades and you're able to triple your account. But you might have been risking too much, right? Because in the future, you might not be that lucky and actually end up with a lower win rate and more losing trades in a row and get into a deeper drawdown and then throw up your hands and say, I quit, right? So that's one thing, obvious, right? The other thing is, what people don't talk about small samples is if you get an effect for a really small sample of, in this case, 32 trades where she had a 59% win rate, a 1.2 reward risk ratio, that can tell you that you have a really strong edge. Like if you only take a few trades and you find like this really good effect, even if you take out the impact of the risk percentage that she was using, right, per trade, even if you pull that out and just like in terms of R, right, R, the amount at risk versus the amount of return, you see that this is a really strong effect. That could mean that you're dealing with a really strong edge, right? That your interpretation of the kangaroo tail, that the way that you trade it is viable.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And so that's something that no one ever talks about. And people just say, they just assume that small sample equals maybe you just got a freaky lucky, thing. But actually, it also could be that you don't need, a really strong telescope to see the moon. I mean, because you can see the moon with your, with your bare eyes. And that's the kind of thing that could be happening with that. So that's something I just want to point out for traders when you're testing is that, it's really easy. Everyone knows the story about you don't have enough data, okay, fine, right. The other side of that is if you have too much data, you're going to find a really small edge, right? And maybe you don't want to trade that. Maybe you don't want to trade the really small edge. Maybe you want to trade those systems that after 50 trades, it's pretty obvious that, okay, there's something going on here. So that's something that I wanted to point out and I think can be useful to the other traders out there. I know like in the past, you've traded systems, presumably I know that you've tested because you're really good at that, right? And then later on, you might decide, well, this isn't really, this isn't really for me. Is that because you think that you were trading something with a small edge, or are there other reasons that came in to that? Or
I think in the past, for sure, like the small sample size kind of messed with my head a little bit. Now I understand that, some of these systems are only going to have a few trades. Like what I'm testing right now, actually, it only does not even one trade a month. But when it does fire off, it's like a 90%, probability of winning. So it's one of those things where you just have to keep it in the toolbox, and then if it comes up, then just track the metrics, track the results versus the back testing, and then kind of go from there. But yeah, definitely the small sample size thing did mess with me before.
Yeah, it's a bit tricky, It's kind of like systems where everyone focuses on the entry, and it's similar with testing. Everyone looks at, the win rate, and they look at, the sample size, and they all work together sort of thing. Some traders I know, they won't even use money management. And actually, technically, she didn't either because she risked a constant lot size on all of the trades, even when the account doubled and got to the tripling point. That's kind of cool because when you use fixed lot sizes, you can look at R, right? So that's a way of looking at your R return. And I know lots of traders, usually they're programmers, like they have a really analytical mind. They won't even trade something unless they run the test in R, on the basis of risk and see what kind of R did it return. Did it return 15R or 50R or 30R? After 500 trades, how many R am I up? And so that's another way to look at it. And that's actually probably one of the best ways to look at it as a trader. Before
you can actually tune things, right? When you're looking at R instead of just the percent or whatever you're doing, right? Fixed percentage.
Yeah, because if you use some really hyper aggressive algorithm with your risk, they can make it look really good when really there's just a small edge. So yeah.
And what do you think about Monte Carlo testing?
I'm a big fan. The reason why, it's because, the reason why I like it and the reason why I pay people to create spreadsheets because I'm not smart enough to make them is because if you use Forex Tester, you can get sucked into this idea. Well, for example, that woman that was backtesting the kangaroo tail, and she posted in the forum and she said, hey, this is what I got. You cannot, as a Forex tester trader, run through the same number of simulations that you can with Monte Carlo. You're just going to be on one path. And so you can think, okay, that's going to be pretty close to what I'm going to trade if I go live. The reality is that might not be true. The great news is with Monte Carlo, for people that don't know, Monte Carlo is just when you run a whole bunch of simulations. If you can't do those in your 50s, then you're definitely in trouble, right?
Exactly. Yeah. And I think a lot of it's like a mindset too.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. All right. Hey, Walter, I want to talk about NAD and resveratrol. You turned me on to that, and you've been doing this longer than I have. I just started it, so I want to see what your experiences were, and that might help some people out there.
Yeah, sure. So, so we should put a link to the David Sinclair interview. We'll put it in the show notes so people can click and watch that. It's 10 minutes or something, but kind of gives you a background on that. So my understanding, so there's a guy named David Sinclair, right? He's from Sydney, and he's now at Harvard. Again, I'm not a biologist or anything like that, right? So, in fact, I took one biology class, and it was because I failed physics in high school. So because I failed physics, or got a D, right, and I wanted to go to college, the reason, it's a long story, but I tried not to fail physics. I was in the lab group with these guys that were jokers, and they would like turn on the eye washer and stuff and like spray it all over so I basically got lumped with these older guys, these older kids in high school, and totally got screwed. But it's my fault. I shouldn't have joined, that was the wrong lab to join, right? Yeah. Anyway, so then the teacher was like, this is a funny story. Then we'll get to NAD, I promise. But the teacher was into like skulls, okay? He collected animal skulls. So he was like, hey, if you bring me an animal skull, I'll skin it and you'll get extra credit. So I was like, oh man, maybe I won't fail physics, right? So so it was like Easter holidays, right? So we had a week off from high school, whatever. And I'm like driving around where I live. It's kind of rural, lots of farms and stuff. So I'm driving around looking for like, a dead rabbit or something that got hit by a car, like some roadkill, right? And a snake, anything, right? And I found a coyote. It's like, holy cow, like a coyote was hit on this, this road out, out in the country, not far from where I live. And I was like, I'm the kind of person that has a problem giving blood. Like I get really wheezy.
Same
so
here.
There's this coyote. Yeah, you same. Yeah. This coyote, I had to saw off his head, okay, with like a hacksaw, like a something that you take a branch off of a tree, right? It took forever. The skin was so strong, man. This was crazy, and I'm sure there was like fleas all over this thing. And so I sawed off the head. I put it in like garbage bags, double bagged it because I didn't want to get blood all over my car, Bring it to the guy. He lived around the corner from my high school, my physics teacher. I bring it to him. I knock at his door. I'm like, hey man, I got you a head. I didn't want to fail physics, and so because I really wanted to go to college, and this was going to be a black mark on my record, right? So he's eating like cup of noodle soup. Okay, I'm not kidding. This is totally true. He's eating like a cup of noodle soup. And when he answers the door, he's like, "Oh, let me have a look." He opens the bag, like pulls out the head, checks it out. So, oh, coyote! Wow, thanks. And he's really excited. Puts it back in the bag. Still eating his cup of noodle soup. I'm like, this is disgusting, man. Anyway, found out after school's back in a week later or whatever, after our spring break, or 2 weeks, whatever it is. He's like, oh, the skull was no good. It was too crushed, because when it got hit by the car, it like crushed its head or whatever. I'm like, oh, okay. But I still got the extra credit. So I guess I went from an F to a D. You know what I mean? So that like got me so I had to take biology in junior college, and that worked as a science credit. I had to retake physics. So I had to take, summer school at the junior college, which was cool because that actually worked toward my college degree too, so it kind of double counted for high school as well. So that's my only biology course. Okay, so that's a long-winded way of saying I know nothing about biology, and even less about physics. But David Sinclair discovered this compound called resveratrol, right, which is in wine and is pretty well known now. But he also talks about this thing called NAD and NMN. Now, I have no idea what they stand for. You'll have to look at the video. It's like nicotine mononucleotide, whatever. But the idea is that all of our cells have NAD in them. It's either, I think it's NAD, and I think NMN is the precursor to NAD. But anyways, everything in your body, all of your cells have this NAD. If you didn't have it in your cells, you would die within minutes, okay? So that's how important this stuff is. The interesting thing is, as we get older, our levels decrease. Okay, so this is one of those things that sort of, they believe, leads to aging. Okay, so what David Sinclair says, you can, and they found that this works in mice. With mice, they actually give them this stuff with resveratrol. So it's NAD with resveratrol, or NMN, which turns in NAD when it's in your body, right? It's like their hearts are like, they have the hearts of mice that have been running, like runners, like marathon mice, right? Yeah. And they don't get tired. right? And they live longer and they regenerate faster and all these really cool things. And so the idea, the belief is, if you increase the NAD in your system, especially as you get older, because it's decreasing naturally, you can feel younger, you can, all those sorts of things, feel more physically fit, even if you don't exercise. Like that's what they found with the rats, is that the rats that do exercise but don't take the NAD, don't have the NAD in their resveratrol supplements, and then the rats that just don't do the exercise but actually have the supplements, they're the same. Like they both have the same ability and all that sort of stuff when it comes to exertion. Like they don't get tired. And so I found the same thing. Like when I get injured, like if I'm running and I injure my ankle, or I injured my shoulder at the gym or whatever, and it was like terrible injury, and I was talking to some guys my age, and they're like, "Oh man, it's just that's what happens, man. Your shoulders go," and they'll say, "I'm like, oh, really? No." So I'm like, I'm really on the NAD really hard. And what I found is that if I take, and I've been really good at taking it every day. What I found is that I do, even if I haven't been running for a while, I still am able to run upstairs, no problem. Like I don't get winded. I feel like I've been running. And what I found is that my shoulder is like almost completely healed. And it wasn't healing forever. But now that I've really been on the NAD, like, you know what I mean? Mm-hmm. And you feel like you have more energy. You just feel really good. It could be placebo. Definitely it could be that. But I would encourage people to look into it, because Sinclair's not the only one doing it. There are other ways that you can naturally increase this. Like another one is rose hips tea apparently can help that, like starving yourself.
Yeah. The cool people tend to hang out late. They like to drink. And once you start drinking, all the stuff comes out, right? And everybody's like good buddies afterwards.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, they say that you're the average of the 5 people you hang out with the most. So what are your tips on like finding more successful people to hang out with?
Yeah, that's interesting. I think it's kind of like finding a mentor. If you're trying to learn a new skill, I believe that going to university doesn't necessarily prepare you as much as maybe like working with somebody would, like someone that kind of like says, okay, I'm going to show you how we do this sort of thing, which is kind of funny for me to say that, because I spent so much of my life in school, getting a PhD and everything. But having said that, that's how a PhD works in science, is you kind of work with a mentor. So, even more so in places like Australia or England, where that's pretty much all you do. Whereas in the US and Canada, they have like courses, you actually take classes. But in other countries, the PhD is literally just working with a mentor. So I guess that makes sense. But so here's the thing. For me, and some people do this, and I understand why they do it. They just hang out with people because, like what you just said, like they go, oh, this guy's really successful, so I want to learn from him or work with him or hang around him, and kind of figure it out. I find that you kind of like need to like them too. You know what I mean? Like it has to be someone, you know what I mean?
Yeah.
Like it has to be someone. I mean, some people do that. Like they're totally cutthroat and they're just like, in fact, Lincoln's wife, I think his second wife was like that. I think it's the guy who wrote the How to Influence People, How to Make Friends and Influence People, Dale Carnegie. Is that his name? Yeah. I think he wrote a biography of Lincoln, which is really good if anyone, if you haven't had a chance to read it. Anyway, it sounded like, and Lincoln had a terrible life. Like he had so many bad things happen. People kind of might know that before he became president. Like becoming president was probably the only thing that he actually succeeded at. And even at the time, he was like Donald Trump is today. Everyone hated him. So it's funny that we look back and we go, this guy is so like, I guess we used to think he was a good president before we tore down his statues and stuff. But anyway, so his second wife was like that. She was cutthroat. She was like, It was funny. Like I think she was at some point considering who to marry, either Lincoln or the guy that Lincoln was running against for Senate. Like she literally like it was kind of like a coin flip. She's like, and then she chose Lincoln. And then he like lost the race, and the other guy won the Senate race or whatever. It was so funny. It was something like that. Anyway, so for me, I like to have friends that that I like, and it's nice if they're also someone that you can learn things from. I think part of the process of this, like if you have a lot of friends that you feel like they're not doing as well as you, or they're not at the point, like they just seem to always have bad luck, or they always seem to be down. Part of the process is just pruning those relationships from your life. You know what I mean? Like kind of cutting the ones that you don't want that influence in your life anymore, which is always difficult, especially if you've like grown up with somebody since you were kids and that sort of thing.
Or it's a
That's
family
always
member.
tough. Yeah, or a family member. Exactly. Yeah.
Yeah.
Even better. Yeah. Good. So I think that's the first thing you do. And then the other thing is it's pretty easy. Like you think about where will people be that you think you'd get along with. So it would be like, if you keep going to McDonald's, what are the chances that you're going to bump into someone that's got a $3 million trading account? You know what I mean? Maybe, but chances are you're probably more likely to find someone who's, not at that level. So there are a lot of places you can go. I mean, that's why they have like clubs and stuff, like they have in Sydney here, they have the American Club where all the Americans hang out, and all this stuff. It's so funny. Like, and they had that, a friend of mine, she worked at the one in Japan, in Tokyo, they have the American Club and they make like deep dish Chicago pizza and, golfing and things like that. It depends on what you're into. I've made some really good relationships, mostly from older people who are retired through surfing, because in Australia, surfing is and probably similar in the US, like everyone, like there's a whole wide
national
range of
sport,
people.
right?
Yeah. A lot of people do it. Yeah. It's not just a certain demographic. You know what I mean? Like, whereas you might say, like, if you were going to do badminton, there's probably a certain type of demographic that's going to do that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And maybe bowling is similar, but with surfing, it kind of cuts a wide range. And so I've made some really good personal mentoring relationships from people. Some of them have died because they were older from surfing. So for me, that's been. So I would just say, do what you like and think about where the successful people would be and try and go there. If that's something that you would do naturally, like if it's not, if you're not into like bridge, you don't have to go learn how to play bridge or whatever, you know what I mean? Like you don't, and go into the bridge club or whatever, or golf or whatever it is. I would just do what you like to do and think about where they would be. So, but the first step, the most important step, is cutting the relationships from those people that you feel like are holding you back because they're always, everything seems to be against them. They're always kind of a negative, energy on you when you're around, and they kind of drag you down. That's what I would say. What about you? What are your ideas?
Yeah, no, that's a good point. I totally believe in what you're saying about taking your interest first and go do that, and then go find some cool people, because there's always going to be cool people in those activities.
Yeah.
And I think the general area is another thing to consider. Like, what area are you doing these activities in? Is it more of an upscale area, or is it like a lower income area or whatever? That can play a factor in it. Another thing that's been helpful is just going to like meetups or any kind of group associated with trading, and then just staying there and hanging out late. Like, I think that's one of the key things. Like, the cool people tend to hang out late. They like to drink, and once you start drinking, all the stuff comes out, right? And and everybody's like good buddies afterwards.
That's a good tip. Yeah, that's a really good tip, because it's so true what you just said. That's kind of where, like, those conferences and those things where you have a lot of, whatever the field is, like trading or whatever, and that's where a lot of that stuff happens. You're right. The other thing that you said that reminded me is you can move, right? So if you live in an area, like, let's say you're fairly young and you're renting or whatever, right? And you live in a really nice place, but it's in kind of a cheaper neighborhood. What if you were to move to a really small place, an expensive neighborhood? I think you really bring up a good point, Hugh, what you're saying about when you're saying about where you live, because if you don't live in a nice area, you can always move, to some place. Yeah, so you kind of like check in with the app. It's not like you're just like, Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about some strategies for calming yourself down during trading. Maybe you had a bad day, got into a fight or something like that. What are some strategies that you use to calm yourself down?
Yeah, good one is breathing techniques. So one would be like, You want to breathe in and out your nose. I think there's a new book about this called Breathe. I don't know. Maybe we'll put it in the show notes. This guy kind of went around the world and learned all this stuff about breathing, which people said, what? You're writing a book about breathing? Obviously, these sorts of things have been handed out through the centuries, especially out in the East. One way to do it is to breathe in, close off one nostril, breathe in one side, and then breathe out the other. Mm-hmm. Or you can just breathe in like to a count of 6 and then breathe out to a count of 6. If you're really small and younger, maybe a count of 5 or 4. But if you're if you're a normal adult, the reason why I say that is I do it with my kids and we don't count to 6 because they can't go that far because their lungs are too small, But if you're a small person, right? So that's another thing. Or you can just simply, I like to lie down. I know some people don't because they fall asleep. But you can lie down and do the sort of the guided imagery thing where every breath you take, what you do is you feel the relaxation kind of moves further through your body, like starts up at your head, goes down through your neck, your shoulders, your body, your abdomen, all the way down to your toes. So after 2 minutes, you've got to the point where that breath, like the first breath, the first exhale, it's like here. Second exhale is like here. As you go, you kind of just let it go. So that's more of a sort of like a guided imagery or guided meditation sort of thing that you can do. Those are probably the easiest ones. Like if you breathe in and out your nose and you do it slowly enough, you will reduce your blood pressure. Like there's all kinds of things that you can do. If you're like in a full panic attack, the tips I got from that were, because I used to get these for a really short period of time when I was going to defend my my dissertation in psychology. I was freaking out because I tried to defend it and they failed me. And so then I was like, well, I hope they don't fail me the second time. Like, what are they going to do? So I was really freaking out, and I learned to put your face in ice water. Okay, so if you're like super, like really kind of heart palpitation, I mean, this is not just normal, stressed out. I'm talking about like really full on. Put your head into ice water or bear down and squeeze like you're doing a poo. That's the other one. Those two are like totally, it's like a nerve thing. Like you can't, you know what I mean? Like they both will slow down your heart. So that's just extreme. But otherwise I would go with like the relaxation, visualization of your body relaxing, or the breathing thing can work too. What about you? Do you have any tips on that?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, I mean, I do the breathing thing too, but I also use this device from HeartMath, and they measure your brain-heart coherence. So that's a visual way, at least you can see on the app, like how coherent you are right now. And they usually recommend that you breathe like, I think 5 times. I mean, not for 5 counts, and then breathe out for 5 counts, in for 5 counts. And that really slows things down. It increases your heart rate variability. And then once that graph is green, then you know that you're kind of in a good place to start trading.
Okay, can I ask you a question?
Yeah.
When you do this, are you sitting up or lying down, or what position are you in when you're using this?
Yeah, just sitting down in my chair.
Okay. And so when you're doing it, are you looking at the app? Like, is it like a biofeedback kind of thing where you're looking at or is it different?
I personally just do 5 minutes and I don't look at the screen, because when I look at the screen, it freaks me out and my graph goes back down again.
Yeah, that's what I would be worried about. Like that was my concern. That's why I asked that. Yeah. Yeah. So you kind of like check in with the app. It's not like you're just like, I can see where that would be for me, that would be definitely like for you the same. That would be counterproductive. Yeah. Gotcha. Yeah. That's the thing. Like I love those apps. I'm always concerned about, is my attention to be on the app, like the screen, or is it going to be more on what I'm working on? That's the only thing I always wonder about those. But yeah, that's a great way to do it. Really, you just check in like every 3-5 minutes, just check in and see where you're at. Yeah,
whatever works for you.
And the one that you turned me on to, that has the headphones that you plug in your headphones, and then what was it? And then like the chirping, the birds start chirping and stuff.
Yeah. The Muse headband, right?
Yeah, the Muse headband. Yeah, that one's cool because you don't actually have to look at it. It just tells you with the audio. That's why I like that one. Yeah, you know what I mean? Like it'll tell you when you're slowing down. Like it'll tell you when you're in a lower brainwave or whatever. Yeah, that's what I like about it. Yeah.
Yeah.
So that's another one.
Even with those though, like I end up looking at the time, so that kind of throws me off sometimes.
Yeah, that's true. Yeah. Cool.
All right. Thanks, Walter.
Thank you.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Has anyone made it before as a comedian? And they're like, well, yeah. Well, then I'll figure it out. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are the basic trading personality types that you've seen?
Well, it depends on the dimensions you're looking at. So I would break people down into two categories, and we'll be really simple. Okay, people who focus on the reward, and there's people who focus on the pain. And then there are people who are super conscientious, and there are people who are not so much. Okay, so we'll just do those four things. Okay. So what you want, I believe, what you want to do is focus on the pain, but also be conscientious. I think the worst combination, so I could, if you had if you drew a box with 4 spots, you know what I mean? So you could be really conscientious and focused on pain, which is basically losses in trading. If you're there in that area, what that means is you're probably not going to risk too much. Now you can go extreme. So I know this guy, he was the co-founder of Awanda, and he was super extreme, too far. He was just risking 0.1% and stuff like that. He was really, really low, really risk aversive. So the other side, so you have those 4 squares. So you have risk averse or focus on the pain and very conscientious. Conscientious just means you're very meticulous and you're aware of what you're doing and you're not sloppy. And you know what I mean? You're so someone who's very good at being organized is conscientious, right? And it's also helps to be self-reflective too, but that doesn't necessarily mean, conscientiousness may or may not relate to that.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Then if you're focused on the reward and you're low in conscientiousness, that would be the worst, because in that case, all you really think about is how much trading can make you. You don't consider the drawdowns, the losing streaks, and you're not very good at this is the kind of person that's always kind of swapping systems and oh, well, so-and-so said to buy the euro, so I'm just going to do that because, he's always right. Even though you've never tested or anything, his strategy, just kind of that sort of thing. And you can do a conscientiousness test. We can put that in the show notes and see where you are there. But that's what you want. You want to be higher on conscientiousness, and you kind of want to focus on the risk or the pain of trading, because that's what's going to end up ending the game for you. It's not the reward. The reward's great, and it's great to look at that, and it's great to target that. The driving feature of your system should be dependent upon the risk side of it, because that's going to define how long you get to play the game. So, yeah, that's what I would say.
Cool.
That's how I look at it. So those 4 dimensions, those 2 dimensions with 2 categories. I know it's very simple, but that's an easy way to see it.
Oh, that makes sense. I think for me, it's like people are either focused or unfocused. Focused people tend to figure it out, and if you're not focused, then they tend to go off, do something else, and go flip houses or something like that. So
yeah, exactly. It's a means to an end. And if you really press every trader, they'll like even in the beginning when you say, "Oh, I love it" and all that, they'll still tell you it's a means to an end, and that's true. But you're right. There are people who are like totally determined, and I can't remember. I remember there was a comedian, and his parents were like, "What? You're going to be a comedian? Are you serious? That's ridiculous. You'll never make it or whatever." And he's like, "Has anyone made it before as a comedian?" They're like, "Well, yeah." Well, he's like, "Well, then I'll figure it out." Like, you know what I mean? Like, then that's, you know what I mean? Like, those are the kinds of people, like, it's the same in trading. Like, oh, well, you're going to be a trader? Well, everyone loses money, blah, blah, blah. Well, has anyone ever figured out how to trade? Okay, well, I'm going to do it. That's the kind of the approach I think that works. It can be painful. There are shortcuts. Information is helpful, but too much information can get you off track. I mean, there's so many things you have to keep in mind. But yeah, I would definitely say that's a big factor, what you pointed out. That's a huge one. When I was undergraduate school, one of my professors, she kind of made a side bet with her lab assistant. She didn't know, like I was dating her lab assistant. She didn't know, and she told me. She's like, there was me and my other friend. We were both trying to get into graduate school because we both wanted to get our PhD. And my friend was way smarter than I ever would be, right? Like he was naturally gifted, okay, at a lot of things. And she said to the lab assistant, who was my girlfriend, and she didn't know, she said, which one do you think is going to go further or whatever in psychology? And the professor basically bet on my friend. He's way smarter, but he's not really that motivated. Like we all knew that he was really smart, but he wasn't that motivated. He never really had to try. And then, my girlfriend's like, well, I don't know. What about, Walter? Because he's like super motivated. And she's like, yeah, but he's not that smart. So yeah, it was pretty funny. Anyway, fast forward, my friend, he went to graduate school for a year and dropped out. So he never, I went through it. Yeah. So it's exactly what you're saying, basically. So at least in this one instance, yeah. So I agree. Yeah, motivation is true, man. Like if you have that motivation and you're determined no matter what, then you'll find a way. You will find a way. You just have to do it long enough, and then you can get it. You can definitely get it. Yeah,
for sure. Yeah. Well, talking about personality types, what do you think about like all these personality type tests? Do they help? Do you think they just hinder?
It depends on what you're trying to do, I guess. This is a big thing in psychology. In personality psychology, people always talk bad. Like the one I was telling you about, the conscientiousness, that's from one called the Big Five, right? And, they talk about the 5 dimensions. And it's kind of like intelligence. In psychology, intelligence is a hot topic too, because people go, well, what is it? Is it a general thing or is it like individual specific things? And it's a big debate. If you're a person who's trying to get better at trading, then I do believe there are some tests that can help you at least become more self-aware and probably focus on something. Like if you identify something is your weakness, then that's really helpful. That's a very good thing to know. It's also kind of, which I think is what you're hinting at, it's also kind of taken to an extreme where it's like you take this test and you'll know for sure if you're going to make it. Like, that's not, you know what I mean? Like that's like, because personality changes. That's another thing. Yeah. We used to think that it was like solid set. Not true. Personality changes. You can become more conscientious or you can become less conscientious. You can become more determined and you can change your mindset from sort of a defeatist sort of woe is me, everything always, my life, I always have bad luck. How do you know that the walrus is angry and he just doesn't always look like? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, revenge trading. I know some traders do it. I haven't really suffered from that, but let's talk about that and see first of all, why do people do it? And what are some ways to overcome it?
Well, to me, it's kind of like the same reason why, as humans, we will look at different animals and we'll give them human characteristics. There's actually a really fancy word for that, and I can't remember what it is. But like it's where they do that in Disney movies, right? They take animals and they make them look human. And we do that when we see animals. Like you go to the zoo and you go, oh, look at that walrus. He's so angry, you know? And like, but you like, how do you know that the walrus is angry? And he just doesn't always look like, you know what I mean? Like,
yeah.
To me, that's a weird thing. And we do the same thing, I think, with the markets where it's like, you little pound, you got me this time. Next time I'm going to get you sort of thing, you know? It becomes this thing where it's like, I'm going to get back at the pound because the pound has been beating me up and taking my money. That's just a license to get off the like you're going to be off your plans. You know what I mean? Yeah. Like you're going to get way outside of that. And
now it's personal.
Yeah, it's personal. The other way it comes up though is brokers. Like you'll hear people say, "Oh, my broker got me again," or whatever. I will say that there are brokers that do that, especially in Forex.
Yeah.
But it's not the norm, and you can usually figure out who they are really quickly by the reviews. So when you see these reviews where these brokers are just getting hammered, all the brokers get hammered in the reviews actually, but the ones that get really hammered, you know, those are the ones that you want to stay away from. And sometimes you can kind of tell when someone gives a broker a bad rating. You can see like they're like, well, what they're saying is completely ridiculous. Like, like I'm actually on the side of the broker. You know what I mean? But so you can get spiked and things like that, and so you're like, oh, I'm going to get that. I'm going to get my money back and stuff like that. But it's really important for you to just determine like what are you trying to do as a trader? Are you trying to make money out of the strategy that you've tested and you know has a really good chance of working? Or are you trying to get back at the broker, the currency pair, trying to prove your boyfriend or girlfriend wrong that, you know, you can make it out of trading? Like, what is your real motivation? And I think the closer you are aligned to following your rules and actually following that path, I think the better off you are. But that's
totally. Yeah. Totally, for sure. And I think it really boils down to ego, right? Like we want to prove something, like you said, and our ego can't let go of it. And we need to get back at them or get back at whatever we perceive to be the culprit or cause us to lose. So what do you think are some ways to get over that?
Get over it. First of all, what you said is I totally agree with. The female traders typically don't have as much an issue with that. They're really good at letting go of ego. Typically, not always, right? Typically, they don't have the ego that men do. And you'll see this when you go to like see trading gurus talk. The men will talk about all the money they made and how good they are and how they did this and that and blah, blah, blah. And it's like, you know, you're setting yourself up for a failure. At the time that we're recording this, there's a really famous dude on Twitter who trades stocks, and he's made a boatload of money. And the last couple of days, he's lost 4.5 or 4.2 million or something like that, because he's letting his ego take over. And he's saying, like he says, the stocks only go up. And if you have any, rule number 1, stocks go up and they only go up. Rule number 2, if you have any questions about what to do on a trade, see rule number 1. And so what he's doing is he's really setting himself up for a life-altering loss.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for 1 entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And if you read like the Market Wizards books, you'll hear all the stories about these guys who went through that. So how do you get rid of ego? Okay, what you need to do is you need to become your own manager or have a manager, one or the other, or probably both. So one, to become your own manager is rate your score on entry and rate your trade on exit. Okay, and objectively look at that every week, every month, every quarter, every year. How are you tracking? You can keep it in a spreadsheet, see how you're going, how your rating's going. The other thing you do is every week you can talk to someone else and have them do the same thing and say, well, you didn't do what you said you were going to do with your system on 3 out of your 5 trades. So what's going on here, buddy? Right? Like that's another way. So what you're trying to do is step out of yourself and see your performance from another's point of view. This is why the professional traders, when I say professional, I mean like the job, the guys that's their job at the bank or the fund.
Traders,
yeah, they have someone looking after them. They all do. And when they leave, they don't, right? When they go home and trade with their own money, they don't anymore, okay? And let's look at the difference between performance. So you can create that yourself where you have someone else. You can try to do it yourself with your journal and rate your entries and exits and rate your performance on the execution side, but you can also get these sort of reports from somebody else that you trust. And you can do the same thing. It's a trading buddy sort of thing. I try to connect people with trading buddies in the forum, and it's a really good way. Like, just every week, man, just work on one thing. What's the one thing that you tell your trading buddy you're going to work on this week? Simple as that. And then at the end of the week, how did you do? Did you do it? What? Show me. Let me see the trades. Let me see the data. Even if the one thing is just, I'm going to backtest 100 trades this week. It doesn't even have to be live trading. It could be backtesting or whatever. So yeah, that's what I would recommend to do is offload the responsibility of knocking down your ego to someone else. They're much better at it.
Yeah.
Hopefully
Exactly.
they'll tell you the truth. You need someone who's truthful, right? Yeah.
Exactly. Yeah. And I think we both know several bank traders who could trade well at the bank, but when they leave, it's really difficult, right? And it's part of that system. Now, I would also add, like, I think it helps to physically imagine yourself, like, separate from yourself almost, and like observing yourself as like a third party, and that helps me to get more objective about what I'm looking at.
Yeah, like a camera. So
Yeah.
so I think it's I've read about this when I was on my trading sabbatical. Yeah, so you kind of, like, back in 2004, I don't know if it's NLP or maybe it was NLP, but the idea that you kind of see, like you say, like, you're there trading. And I remember when I first started doing it, I was like, man, I looked at myself and I felt like I was addicted. Like, I felt like I watched myself trading in my setup, and I had this really comfortable chair, and I was sitting at it like every night. And I just thought, man, like, you're just sitting there in that chair the whole time. What are you doing? Like, and that's when I kind of moved away from trading the lower time frames. I just thought, I realized, number one, that all my best trades were the ones where I didn't sit and watch it. And so I kind of walked away. And thing number two was doing that technique you just said, which is a great technique, because I kind of objectively saw, man, my body is going to mold into that chair. Like, I am going to, you know what I mean? I am going to be like, I'm going to turn into Jabba the Hutt, because, and I would fool myself, because all day I was surfing, I was going, doing whatever I wanted. And then at night around 6 o'clock is when I would sit down in that chair and just lock into the computer, and I'd be there from like 6 till 2 a.m. It was crazy, man. So yeah, so I just thought, this is not a good idea. And so that can definitely help. You could ask other people. I mean, like, it doesn't even have to be, I don't, with your trading accountability partner, you want someone who's a trader, but it could be someone doesn't really understand trading, and you can ask them about, what do you think about, my trading, or how I'm, because then you might get a perspective about, they might say something that'll shock you. Like, are you really happy? Like, is this really what you want to do? Like, you know what I mean? You always seem so upset, or, they could give you some sort of weird insight that you hadn't even considered.
Yeah, because if you're in it, like, there's a certain amount of dogma associated with any type of activity or profession, and some people get brainwashed into that. But when you get an opinion from somebody else from the outside, then you can get something that's fresh and something that's not necessarily part of that dogmatic thinking, right?
Yeah, absolutely. Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
I would argue even the most successful have been women, the ones I've met, actually, and that's a very small population size, obviously.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about men versus women in trading? Do you think that generally women are better traders from the beginning, or do you think men are, or what do you think about that?
So there's this idea in like science. I understand it from psychology, but I'm sure they have it in biology too, which is, you're born with this range. You're going to be a height. Like, your genes are basically going to determine pretty much the upper and lower limit. So you might be 6'3", or you might be 5'11", but you're going to be between 5'11" and 6'3", or something like that, right? Depending on your nutrition and things like that. Okay, so, and I guess, how much you stretch your spine or whatever. Like, I don't know how you get taller. Like, how much yoga you do. Yeah, so the way I kind of look at this with the women versus men sort of thing
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
On average, and I know we're talking about averages and stereotypes and all that,
Yeah,
but
sure.
On average, men have a wider range. And here's why I say that. Because sometimes you'll find a Jesse Livermore, and you guys can look up who he is. You can go read Reminiscences of a Stock Operator. I'll put the link in the show notes for this episode. He was crazy. Okay, he took risk to the max. Actually, you could argue that George Soros is the same way. George Soros is very similar. The upper limit is when you just go hog wild. Now, Jesse Livermore also killed himself. George Soros is to be determined. Okay, so you may not want to be, Jesse Livermore, right? You may not want to go into that. So that's the other thing, is that George Soros and Jesse Livermore, they're at the upper edge because they got so wild with risk. Then you can also have the lower limit down at the bottom where there's people, same thing. They get crazy with risk. They're doing revenge trading, all this crazy stuff, and they end up blowing out. Whereas I think women have a tighter range, right? So I think women typically don't let ego step in and kind of dictate what their position size is for any given trade, right? And they typically a little bit more measured. I actually think that women in general should be running the world. Like, I actually think we would have fewer wars.
Yeah.
There'd probably be more wisdom in terms of, you know what I mean? Like, I just think the countries would get along. That's another story. So I think that they have a tighter range. So they're probably more likely to make money overall, but also they may not have the extreme highs and lows that you get when you get these wild cowboy guys, stepping in the markets, which is like, they're there, man. You can see them, and you can see them today. You can go on Twitter. I had no idea that Twitter was such a spot for traders, but it is. Like especially the stock traders. It's crazy. I've only really realized that in the last 6 months, but
Okay.
it's entertaining. It's actually entertaining to see these guys try and blow themselves up. It's crazy. Yeah.
There's actually some good opinions there too. So
Yeah, absolutely.
yeah.
What do you think? I mean,
for me at least, the most consistent traders I've ever seen, and I would argue even the most successful, have been women, the ones I've met actually, and that's a very small population size, obviously. But I do know of a couple women who can make a living basically with a 5 or 10 grand account, and they'll double that up every 1 or 2 months, and then they make a living off of that, and they don't want to trade anymore. But I'm on a pure percentage, return. That's like fantastic, right? But yeah, I think they do have a little bit more of a calm head. They generally look at things more objectively, and they don't put that testosterone, I guess, in it and try to go balls to the wall or whatever. Yeah, so I think there are fewer women trading, but I think when they do decide to trade, I think they end up usually being pretty good.
absolutely. Yeah.
Yeah. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. Yeah.
Take it and, be a man.
Suck it up.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, when you're first starting out, what would you have liked to know about trading psychology that you know now?
Yeah, it's a good point. I think probably that's the biggest part of the trading game is the psychology part and not the systems part. I was like a lot of traders, probably like you in the beginning, where all of my focus from 2000 to 2004 was on systems. And back then there was one Forex book that was available that I could find anyway. The rest of them are all technical analysis books for stock traders. Mm-hmm. And so that's what my focus was, and if I remember one day, it was when I moved to Australia, I didn't really have anything to do. All I did was just get books from interlibrary loan. Mm-hmm. So there's a little tiny library in the town I lived in that was about the size of a really big garage,
Yeah.
It was weird, man. It was crazy. It was like walking into a sheep shed or something. It was weird. Anyway, so they had no books, right? And certainly no trading books. But what was cool was I could pay like $10, $15, $20, and they would send these books from all over, from universities in like Adelaide and stuff. It was amazing. And so I had this really cool education of learning all these strategies. But in the end, I realized, and I remember one day I had this system. It was called, I learned it from I'll put the link in the show notes. I learned it from a Jake Bernstein book called The Stochastic Pop. Okay. And I was trading this strategy, and it was actually working. And yet I didn't follow the rules. And I remember going out surfing, like it was a rainy day, and I remember just thinking to myself, what am I doing? Like, I have this strategy, it works, but I'm not following the rules. Like, I'm taking my profits too early, blah blah blah. I'm doing all the wrong things. You know what I mean? Mm-hmm. And it was at that point that I really understood the magnitude of the trading path. Which, really what it is really about you. It's about you, the trader. You are the mechanism that makes it all work. And even if you're an automated trader, like I know some people might be listening to this and they're like, well, I program, I use EAs, blah, blah, blah. I don't have to worry about that or remove emotion from my trading, blah, blah, blah. Well, no, not really, because you turn it on, you turn it off, you modify it. You know what I mean? Like you're still tinkering around. So it's really no different for a discretionary trader and an automated trader or what they call systematic trader, I guess. So that would be the biggest thing. And the other thing that drove that home for me was the Market Wizards books, because I saw all these different traders who were successful and they all had different ways of doing it. And I was like, whoa, because I always thought like there's got to be one way or maybe a couple of different ways it would work. And I didn't realize that there's all these paths you can take, And that was really cool too, because it showed me a lot of them had that experience of having a terrible loss, and that sort of set them off on the right path in terms of risk and stuff like that. So they really kind of recognized the importance of risk management. And then also it was an eye opener, because like, wow, all these guys have totally different approaches and they're all making it work. So that's kind of like, it sort of readjusted my reality, and it wasn't about systems anymore, because like, why would it be about systems? All these guys are, they're trading totally different, completely opposite in some respects, like 180 degrees opposite. So yeah, that was, for me, that was really important, was the realization that it is about you, the trader, and not so much the system. The system's important and you interact with it, and that relationship between you and the system is really important, but it's not the real gains you're going to make as a trader is once you realize that you are the reason why you succeed or fail. Everything else is just kind of like real estate. They say real estate, location, 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 right? And that's true. Like, you can have a gorgeous mansion, but if that mansion is in like the ghetto of like South Central LA, nobody gonna want it, right? I mean, it's the exact same thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Whereas, take the opposite. Let's say you find a total rat-infested, disgusting house that's barely hold up, but it's like in Beverly Hills. Guess what? Everybody's going to want it, because what are they going to do? They're going to knock it down and fix it up. So it's the same thing with your trading psychology. If you have that part right, the system, don't worry about that. Like, that will come. If you can get you right, then it'll, you know what I mean? It'll work. So what about you? What are your thoughts on that?
Yeah, I totally agree. I mean, I think that's something that everybody goes through. And I just don't know if you can get around that, or if there's a way to shortcut that realization. So maybe my thought is that maybe you can look at other areas in your life and figure out maybe what are your shortcomings there and try and fix those things first. And then that will carry over to your trading. Because I think just inherently the way that trading works, I think everybody defaults to the trading strategy. They want to have the highest strategy, highest return strategy. They want to find the most successful trader. But in reality, it really comes down to your own psychology. So I think that might be one way to short circuit that mechanism. But I don't know. What do you think about that?
No, you sound a lot like Ed Sequoia, because Ed Sequoia said that, right? Like, in his book, I'll put in the link for you guys in the show notes, the Trading Tribe book. He talks about how, like, basically what you're saying in a different way. If you have issues in your life, they're going to come up in your trading. And so the whole reason why they have these trading tribes around the world, and you can probably find one pretty close to you for most people listening to this. Like, he has these groups where the whole point of the group is, I don't go anymore. I used to go for years and years and years. And the whole point of it is for you to pull out those emotions, those dramas, like those things that are happening in your life that are like causing friction. You're supposed to experience those and kind of release them in a way, right? And so in a way, it's kind of really Freudian, and the way that Freud talks about, like in Freud's day, the steam engine was the big thing that everyone was relating things to. Like today, it's a computer or whatever, but back then it was, the steam engine, and so kind of like letting off steam sort of thing. And that's kind of what the trading tribe was designed for by Ed Sequoia. Was like, look, you have these things in your life that are like issues and touch points and little disagreements with people or issues with whatever dramas are going on in your life, and you're not allowed to get emotional about this. You're not allowed to, like, especially as males, you're not allowed to talk about them. We're supposed to just kind of take it and, be a man. Suck it up, boy. Yeah. And so the whole thing about the trading tribe is to release it. And so, what I'm saying is he would have a similar approach, I think, to what you're saying, which is understanding that it's not just your system. It's not just you. It's just not it's not just you and your trading journal. It's not you and your platform. It's everything that's kind of impacting that. And I feel really sorry. Like, I feel really bad when I hear from traders who have people in their lives who don't like that they're doing trading and they think that it's a waste. That's an influence. That can really impact your overall bottom line. So I find that what you said to be very true. Like that you have to have a way to release. It doesn't have to be trading tribe, but you got to find a way to get, like, for some people it's journaling, just writing down. For some people it might be like working out or running or riding their bike for miles and miles, or whatever it is. Like, you've got to have this way of kind of like releasing that pent up energy, that pent up emotion inside of you that otherwise can seep into your trading and create like trading dramas, where that's where they play out. So that's, yeah,
no, totally. I mean, I've studied quite a bit of like ancient cultures and how they heal people. And that's totally what it is. A lot of them, regardless of what method they use, sometimes they use some medicine, sometimes they use chanting or rituals, but regardless of what they use, it's all about facing the trauma and then releasing it. And until you're ready to face it, then it's still going to be there. It's still going to cause problems. And I've seen some pretty amazing healings with those types of methods. But yeah, it all comes down to, do you have the courage to face it and solve it? And I think that's the same in trading too, right?
Yeah, that's really interesting. And I bet you, when you look at that, I bet you found that they kind of set it up in a way where, like, you have like a support system around it when you approach that, right? Like, it's kind of interesting, isn't it? That, like, we think of ourselves as so advanced, and we do have a lot of advancements today, but it's weird that there's certain areas, I think, that, like, historically, like you're saying, like ancient cultures had a better approach, like a better way. Yeah. And this might be one of those areas where you see it pretty consistently, right? Like, there's probably a very strong protocol in a lot of cultures for, like, what do you do in this case? Like, how do you help someone through this? How do you get to the other side, sort of thing?
Yeah, no, that's a good point. I mean, they have a lot of strong rituals and protocols, and they also have the support group. So I think it's a similar thing in trading. If you should have a support group, and you should try out some of these protocols that people have, and see if it works for you or not.
Yeah, cool.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I think there's a huge difference between being able to do the thing and teach the thing. Some people are good at both. But most people are just good at one, I think.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are your favorite or most influential trading psychology books?
Trading psychology books? I actually find that more pop psychology to be more useful.
Okay.
To be completely honest. I mean, the Mark Douglas one is pretty good. I would say that for me personally, so when I went through psychology, so I did a lot of psychology. I was surrounded by psychologists, right? So my mom was a psychiatric nurse, okay? And so I had like psychiatrists, psychologists always around, like, because she worked with them, like she worked in like the nut house, right? And so like, you know, we knew, like, and I was, you know, I would go in there and see these crazy people, and I always, you know, I always knew they were different. It's really kind of interesting, you know. When I went to school and did undergraduate and then later on a PhD and master's and all that in psychology, you actually get really specialized. Like the most that you learn in terms of breadth is in undergraduate, and then as you get further on, you kind of, you know, like any PhD, learn a lot about a really precise thing, you know. What I found interesting though about that area of doing that and working with academics and things like that is how like certain ideas are just kind of relegated to like, this isn't real science. You know what I mean? Like there's certain topics you're not allowed to study, right? And in a lot of ways, I found some of those to be the most interesting.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Like, for example, there was a guy in my school, and I know this is a long-winded way, but I'm going to eventually get to this. So there was a guy in my university that he studied UFO abductees, right?
Okay.
And nobody was allowed, like I never saw him. He was a professor, so he was tenured. He had been there for decades, right? And I even walked by his office one time. It was on a level that I never, like there's multiple levels, and I was on the bottom level, and the lab that I worked in. So I never really went up to different levels. But one time I walked by and I go, holy crap, this guy is at this university. I forgot. And he was like a well-known interviewer of people who had been abducted in UFO experiences, you know? Mm. And I thought that like was a really interesting thing to study, right? Like, I mean, but I always listened to like those shows, those late night talk shows and stuff where they talk about that stuff, right? So I was kind of interested in that. So, but yet whenever his name came up, which is only once or twice I can remember, like my mentor would just kind of blow it off like, you know, he's loony bin, you know, he's a crazy guy. Like, you know, and it was so weird, like, because people would just, and that's how it is in science, like certain ideas, like another one would be, I think in anthropology, like they say, like, there's only one theory about how people came into North America, like go over the land bridge from, you know, from Russia and come down and so anything earlier than that, it can't be. Like they actually wouldn't dig to a certain depth. After they dug a certain depth in archaeological sites, they wouldn't go any further because they knew there was nothing down there, which is crazy, right? Yeah. And then now we have all this evidence of like Göbekli Tepe in Turkey, which like this city structure thing like isn't supposed to exist when people were in the Bronze Age, right? Like they're not supposed to have cities and stuff like that. So like there's a lot of there's actually a lot of evidence in North America and South and Central America too. This is a long-winded way of saying what I found in trading psychology is to be kind of like, for me, not that meaty, but I found it in like typical pop psychology. Like I found some of that to be more useful for me. Like, for example, there's a guy named Martin Seligman. He's written a lot about, he's kind of considered the guy who created positive psychology, which again, you know, in some circles, it's kind of accepted, right? But it wasn't something that I learned like all through going to get a PhD. We never had any chapters or readings really on positive psychology. Like it wasn't really a thing, you know what I mean? Yeah. It wasn't until I got out of it and I realized that this guy had written all these books and he had actually, like there are his disciples in Australia who've created schools based on his teaching, and he has all these guys. He's getting really old now, you know, and I saw him, he came out to Australia and you get to like listen to him and ask him questions and stuff at his lectures. But his stuff is really cool because for traders, resilience, and that's something that he talks a lot about, is resilience. Mm-hmm. That's a really important thing because we quit trading systems, we quit trading, we give up on things during losing streaks. And so that ability to bounce back, I think, is the best predictor of trading success. So like you, for example, are a very resilient trader. I know this because I've known you for years and I know like the process you've gone through, right? Mm-hmm. I believe that that's why you've been able to make it as a trader. I know other traders who don't trade anymore, and the reason why, I think, isn't because they couldn't do it, but it's because they've got to a certain point And because they didn't have the resilience, they just kind of gave up. So they never allowed themselves to make those extra couple steps to where they would have actually made it. You know what I mean? Yeah. So for me, the biggest thing, if I had to guess one thing, like, if someone asked me and they said, what should I go, just read all the books on resilience, Martin Seligman, like get into that stuff. And that's really going to help you if you use those tools. And there's a lot of it's not just Martin Seligman. There's a lot of his disciples or whatever, people who've taken up the baton and are doing really good research in this area. And a lot of them have written books too. So look up positive psychology, look up resilience. Those are things that I think can help. There are great trading psychology books out there, like the Mark Douglas one. There are other ones like related to like trend following, where it's kind of like, pick yourself up and go and do it again, sort of thing. Because a lot of the trend followers have to go through that, like Curtis Faith, that sort of thing. But I found personally for me, just applying those lessons from mainstream sort of pop psychology has been more helpful. Yeah. What about you? Yeah.
Yeah. I mean, for me, it was a little bit out of the trading realm, I guess. One of the big ones was the original title of the book was Poker, Sex, and Dying. Dave Kaplan bought it and he renamed it Trading, Sex, and Dying. But the original author, Joel Anderson, was a poker player. He worked at a phone dating service and he worked at I think it was a morgue. So that's where the title comes from, Poker, Sex, and Dying. So he said that based on those experiences, he got a lot of insights into human nature, how people act, and especially at the poker table, how certain personality types would respond to certain types of stimulus. So he could kind of read them just based on the category that he thought they fell into, which is really interesting. And when I started reading about my profile in that book, I realized, okay, yeah, that's me. So I guess before that, I was thinking that these things about me were wrong or they were bad or something I had to change. But then once I read that book, I realized, okay, that's just how my personality is. And I could kind of go forward from there and not be like guilty about it or whatever. So that was one book. Another book, the Mark Douglas, Trading the Zone. Another one is, I forget what it was, but anyway, so it's just basically a psychology book. I'll put in the show notes afterwards. I forget what it is. It just escapes my mind.
Yeah, we'll put it in the show notes. Yeah.
Yeah, but those are the three. But I'd be interested from a psychology standpoint, besides the resilience part, what do you think is most lacking in most trading psychology books in terms of like you say, pop psychology versus trading psychology?
Well, actually, what you just said, because I think you really nailed it. Basically, what you said is what a psychologist would call self-awareness, right? So what you were talking about was like you were trying to like map yourself onto what you're reading in the book. I think that self-awareness would be one of those really important skills. I don't see a lot of this going on in like trading, like most trading books. Okay, so most trading books, 85% of it is devoted to systems, right? Entries, exits. Yeah. And then the other 10% might be a chapter on psychology or something like that. And then maybe another 5% on risk or something like that. Like that's usually what it is. 85, that's typically, you can pick up any book and that's what you're going to find in most cases if it's a normal trading book, right? If it's not just devoted to psychology, obviously. Okay. What you were talking about is being self-aware. Now, how can you be self-aware? Why is that important? Well, in trading, like if you don't know, because I guess the reason why I say this is because if you are self-aware, then you also are like, you have what's called high interpersonal intelligence, right? Like you can kind of read people and stuff like that. So like if you're a door-to-door salesman, something like that, or like a car salesman or, something like that, you can kind of read people. Like you get used to like figuring out if someone's thinking that you're BSing them or whatever, you know what I mean? I've always found that fascinating, sort of like an introvert. I've always found it fascinating to like, if I'm at a party or something or a get together and there's lots of people, I'm always like thinking like, what is that person? And you know what I mean? Like, what are they thinking and what's going on in their lives that they're not talking about and stuff like that, And in fact, I remember the last time I had a job, which was a long time ago, I'm basically unemployable. Yeah. When I had a job, I remember my manager was saying to me, like, you're very aware of your body language and stuff. And like when people were in meetings and stuff, I would always, and he was right. Like what I would always do is I would always like shift and stuff so that they knew that I was listening to them, you know what I mean? And stuff like that to make, you know what I mean? Like to get that sort of, and they talk about it in NLP and all that about facing someone. But I think, so if you want to become self-aware, why do you want to do it? Because you become aware of the mistakes you're making, right? And number two is if you're not self-aware and you can't figure out what's going on, what's going on with my trading? Why do I Like, why isn't this working? There are things that you can do. Like, you can become more mindful, right? Mindfulness is something, that sort of meditation. That's a really buzzword right now, nowadays, this idea of being mindful. But you can read up on mindfulness. You can also write it down in a journal, like an emotional journal, like a diary sort of thing about your trading and your experiences, and not sort of, I entered the euro here, I sold here, and not like that. More of a stream of consciousness sort of thing. You can also write down your dreams, and there are ways that you can like, people say, well, I don't dream, or I don't remember my dreams. Well, you can work on that too. I've posted some stuff on my blog about that. I'll put the links in there if you guys want to check that out. But so those are tools. Those are 3 things right there that you can become more mindful. And you need to be mindful as a trader, because if you're not aware of what's going on with you, how are you going to fix it? You need to know, okay, this is an issue for me. Like, this is not a strength. This is a weakness. How am I going to attack this? How am I going to make it better? Typically, if I'm watching something on YouTube from a trading guru, or more like lectures, I do watch some lectures on like futures, from futures traders and stock traders. Like, I do find those sort of interesting. The forex stuff I don't really find useful. but what's interesting is they will usually say something like this: you got to do this, this, and this. Like you got to fit my pattern, right? Mm-hmm. And I'm not a big fan of that. What I think you need to do is one, become very resilient, and 2, become self-aware. So kind of like, and if you can't do that, other people can, right? Like, having a trading accountability partner can help you, right? Like, a trading accountability partner can help you, because every week you talk to your person and you say, look, this is what I did. And they can say, well, why didn't you do this? If you have those blind spots, those sorts of things, if you're not a really self-aware person, that's what I would do. So trading accountability partner, mindfulness / meditation, and also journaling. Those are 3 things that you can do to kind of up that, because I think you're right. That's basically what you just said, and I think that's really a big one for traders. And again, I don't see this in terms of like trading psychology. I don't see it as a thing that's talked about. It's like resilience. It's kind of like a thing. Like, they usually will say things like, just do this, this, and this, right? Like, follow this path. They don't say like, discover who you are, or here's how to, you know what I mean? Like,
that doesn't sell very well.
No, exactly. Right? Like, that's not a it's not a
too touchy-feely.
Yeah, it is. And a lot of these traders who get these platforms, they're very self-assured because of their experience in trading and the money that they've made, and so they kind of get blinded to the fact that they kind of think that this is the way. Like, you need to do what I did, sort of thing. You don't get a lot of people saying, well, I did it this way, but you could probably also do it this way. Like, you get a lot of sort of dogmatic and that's not, I don't think that for a lot of people, it might be perfect fit for you. It could be, just like you can go to the shoe store and you can pull a shoe off the shelf and that's your size, right? But a lot of time it's not going to fit. So it's not a good match, in my opinion.
Yeah. I think it's, the bottom line is that those people aren't necessarily being dishonest or whatever, but they just aren't very good teachers. I think there's a huge difference between being able to do the thing and teach the thing. Some people are good at both. But most people are just good at one, I think. So,
Yep.
That's
true.
Thing, right?
Yeah, it's true. Yeah, and part of that is because when you get really good at something, you don't know what you're doing. You're not aware.
Yeah.
Like you like think about when you first started driving. Like, when I first started driving, I remember I was in the car with my friend, and he's older than me. He's about 10 years older than me. He's actually a really well-known actor, well-known. He's always covered up in a costume, so you wouldn't know him, but he's in a lot of like movies and stuff. And he was in Silver Surfer. He was the Silver Surfer, and he was in all these different movies. So I had a permit, so I had to have someone who had a full license in the car. And I'll never forget, I was driving with him, and he's like, "Hey man, can you change the radio station?" And I'm like, "No man, I'm driving." You know what I mean? Like, like it's like, I can't change the state. I'm like concentrating on driving. Think about that. Like, it's the same with trading or any skill. When you first learn it, it takes so much of your mental energy has to be focused on that. And then as you get good at it, it's so automatic. It's so like, just, you don't even, it's not even a part of your awareness. It's so hard to even bring into your awareness what you're doing when you're driving, when you've been driving for 30 years. It's just not possible. You know, it's really hard to bring that in. So I don't blame people for that. Again, it's part of being self-aware and mindful. That's how you know what you're doing. And so you really have to almost like get really deliberate, you know. And so for me, one thing that really helps me, and this could help people, even if you're not sharing these videos with anyone, you can download like a free video recording software, and I'll put a link down there for you. You guys can make these videos when you take your trades and maybe when you get out of your trades, even if no one sees them except you, and just walking through the trade and talking about, this is why I'm taking this trade. This is what I'm going to do. If it does this, I'm going to do A. If it does that, I'm going to do B. You're mapping out, just having that record so you can go back and look and go, why did I do that? Like, you know, and eliminating that hindsight bias, because you can see, well, that's all the information I had when I took the trade. I didn't have this future information. You know, just having those sorts of things where you're actually speaking out loud and talking about your trades, that's super useful for people to open up to, okay, whoa, that's a blind spot for me. You know, that's something I didn't realize I was doing that, but now I can see it. So that's another thing you can do too. So yeah, this is actually a really good episode, Hugh.
Yes, we're getting into it on this one.
Yeah, I think this is a good one. Yeah. So hopefully, you know, with all these things that we've talked about, people can use them, at least one.
Yeah, definitely. Oh, just real quick before we end, that book was called Trade with Passion and Purpose by Mark Whistler, just so that we have a reminder for the show notes.
Oh yeah, you know that guy. I've heard about that guy. I went to a husband and wife trader team in Portugal. And they're like, dude, we just had Mark Whistler here. Like, I went and stayed with them for a couple days. Oh, I know what it was. I was at the FX Street conference in Barcelona. That's right. And they said, hey, come over. And I go, okay. And I said, I can only come for a couple days because I got to go to a wedding. And the guy's like, well, whose wedding is it? I go, it's mine. He goes, oh, okay. So I had to go to Tahiti. So I had to go from Barcelona all the way back to Tahiti for my wedding. Yeah. They were saying that Mark was there. And I heard about this guy. I didn't really know much about him until they were telling me. And they said, yeah, he's a really cool guy. So I'm going to check that out too, Hugh. Thanks for that, because I never really heard of this Mark guy until they told me about him. They said, yeah, he's a really cool guy. I said, they're like, we always try to get these traders to stay at our place.
Nice.
And it's a really nice place too. It was like a kind of like a bed and breakfast, you know, like a really nice, right across from the beach, and it's beautiful. Yeah. So.
Oh, cool. Yeah, he's written a few books. I've read a couple of them, and they're really good. He's kind of like a good underground author that I don't think too many people mention, but
yeah, I think you're right. Yeah, but I'm going to check it out. Yeah, thanks for that. Yeah, sure. Awesome.
Okay, thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Well, that ain't going to last very long. And here we are 20 years later, right? It's still over $1. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk a little bit about swing trading psychology. How is it different from other types of trading? What are your tips on becoming the best swing trader possible?
Well, I would say from the data that I've seen, from asking traders questions and putting them through a questionnaire, most traders are what you would term swing traders or end of the trend traders. So about 85% of traders like to find the end of the trend or like the end of a swing move, right? So they like to kind of like catch a reversal. It's almost unnatural for most traders. It's unnatural to try and buy at a high or sell at a low and assume that you're in a trend. So number one, if you're a swing trader, it's probably going to be quite easy from like a mental point of view to try and hook into these. The bad news is there's a real temptation, because a lot of times, let's say you're a swing trader and you get in on a pullback. So it's actually a trend. It's a strong trend, and it's going to keep going. It's going to keep trending. And so you find your reversal entry and you get in it. The problem is, you know, that trend, that reversal is only going to go so far. and then it's going to continue on in the trend. So what that means is you have a very small window to take profit if the market's trending. And oftentimes a lot of swing traders or reversal traders, end of trend traders, their radar really perks up when they see a strong trend because they think, oh, it's gone too far. Like I'll tell you right now, I raised my hand as, back in 2001, I think it was, when the euro went over $1.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And I remember saying to myself, well, that ain't going to last very long. And here we are 20 years later, right? It's still over $1. So, because when I first started trading, it was when the euro first came out. It was always below $1. It was like 87 cents, 89 cents, 92 cents. Like it was always down there, Mm-hmm. And so we always thought it was trash. The euro's trash, man. It was no good. And so I remember thinking when it got above $1, I go, well, totally time to sell. Well, that was like a 3-year bull trend, it's crazy. So it's natural is one. There's a temptation to take quick profits, which I think is bad. I think you're probably going to want to use some sort of element of a trailing exit and also some sort of way of determining whether or not the market is trending or not, and make sure you just stay away from the trending market. So like if you see a box consolidation or a channel, there's lots of different or trend lines or whatever, like if you have a line in the sand, you could, okay, it shouldn't go beyond this, like use that sort of thing. So like trend line, support, resistance, anything that you can really sort of define the market as range bound or at least not trending, you're better off than looking at those wild charts where the market looks like it's gone too far and you just think it's going to come back because it's gone too far. I would stay away from those, and I would try and have a really high reward risk ratio because like I said, it's really tempting to take profit when you catch these reversals and it doesn't really go that far. And then you start thinking, I better take profit or it's going to go against me sort of thing, Yeah. So you're better off just moving to break even and then slapping a trailing exit on it or something like that. You know what I mean? And then saying, okay, well, I either hit break even or I really got one here. You know what I mean? Sort of thing. That's what I would do. But I mean, everyone's got to decide for themselves and test and figure it out if it's profitable.
Yeah, sure. I think definitely patience and lack of patience is definitely the hardest thing about swing trading. Just going through the testing and figuring out, okay, how am I going to exit? Does that exit work? I think is the toughest part. Otherwise, it's pretty easy from the standpoint that you can just take 1 or 2 trades a week. You don't have to look at the charts every hour or whatever. And but yeah, I would agree with you.
Yeah, for sure. Yeah, I mean it's fun. I mean it's fun, right? I mean that's why a lot of traders get into it because they think, well, this is obvious, like it's going to turn around here. And I think for non-traders or new traders, I think that's what they think trading is. Like you have to know where it's going to go. You know what I mean? Like trading is predicting the future when really it doesn't. That's not really
reactive than anything. Right?
Yeah, exactly. Yeah, exactly.
Yeah. Okay,
exactly.
Cool. Thanks, Walter.
Thanks. See ya.
Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Discipline can trump talent. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, missing trades. How do we avoid it? Why does it happen? And how can it affect our trading?
So for me, the way that I've tried to avoid that is by trading. Well, there's 2 ways for me. If I trade higher time frames, I don't necessarily have to miss trades. Like it's just easier to see like the 12-hour candles. So that's one thing. The other thing is like let's say I wanted to take a trade on a 1-hour time frame, then I would just set up an automation so that it enters the trade if you know what I mean, if it's if everything sets up correctly. So so that's what I've done. But I think what you're getting at is the psychology behind it. The difficult part about it, I think, for a lot of traders, like imagine you're playing a soccer game, right? And your team's down a goal. So it's you're 0-1 down a goal. You know, there can be a lot of pressure for you to try and score, right? To, you know, even it up, so to speak. And I think that's kind of the way that some traders, like, we think about trading when we go, well, you know, we missed that one. And then you'll watch it and you go, oh, look, of course it worked out so nicely, blah, blah, blah. And so you kind of feel like you got to make it up by taking another one as soon as possible. The other real problem is getting in late and chasing it. I prefer recently, the last couple of years, I've liked to trade the trend mostly. So that's a real big deal, isn't it? Because if you miss an entry and you don't, you know, and then like it's tempting to get in again after your signal, and you know, if the trade's already up 80 pips or whatever, and you're like, well, I'll just get in now. Or what I like to do is really kind of hold off until another signal comes. Because if it's a strong trend, it's going to keep pulling back. It's going to keep giving you signals on the pullbacks if that's how you trade, right? So it's not really, like, for me, it's more of a lifestyle thing, like making sure if this is something that really bothers you, then just make sure that you don't, like, just set up your day. You know, if you're away from the computer from 7 a.m. to 8 p.m., then just trade those charts that allows you to make your trading decisions, you know, before you go to work or whatever, and then at the end of the day when you get back, like, just set it up that way. Like, it's, to me, it's an easy solution. I understand. But the problem is so many traders are into the lower time frames. They feel like if they quit their jobs, they would be better off because they could see all these, you know, all these candles unfold and that they wouldn't normally see. And that's really the danger, I think, is that you convince yourself that your trading would be better if you were dedicated to it completely. And that's where, you know, the missing trade thing kind of highlights that for some people. Like, oh, well, if I quit my job, then I would have seen this one. And, you know, hindsight bias can seep in and you forget about that one, and that one, which would have been losers, you know? Yeah. What do you do?
Well, I think the bottom line also I see a lot is it just comes down to discipline, right? You just have to have the discipline to, you know, if you're trading the 4-hour chart, check the chart every 4 hours. Or if you're day trading or whatever, then sit down for the 1 or 2 hours that you're going to day trade and just do that instead of like watching Netflix or like trying to make some bread on the side or whatever. Yeah, I think that's one of the major things that I see.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's very true. Like, just setting aside that time, making your schedule, discipline. It's a funny thing. Like, what you said reminds me of my friend in high school. He was a really good basketball player. He was a freshman in high school, so first year in high school, and he was on the varsity team, right? Which is the junior and sophomore, the year 11 and year 12. Normally, kids are on that. You know, he came in straight away, and I'll never forget. We became really good friends, and we still are to this day. And he said. And he went on and played in college and stuff like that. So he's a pretty good player, right? Mm-hmm. And he said, I'm the worst athlete on the team. And I said, really? I said, what do you mean? He goes, yeah. He said, and this is coming from the only athlete on the basketball team who's been on the varsity team since freshman year, right?
Yeah.
And he said, I'm the worst athlete on the team. And I said, what do you mean? He goes, and then I realized what he was saying. I go, oh, you're just saying you work harder than anyone else. And he goes, yeah. And that's kind of like, and it was true. It was absolutely true. He was the worst athlete on the team, and he absolutely worked his tail off because I saw him do it, you know, and I saw the things that he did and all this crazy Russian sports science that he was into and all that stuff. It was really cool, actually. But yeah, so what I'm saying is discipline can trump talent. And in trading, it's kind of similar. Like, discipline can actually, like, you might have a really talented trader or someone who has a really good system, but if they're not that disciplined, you can win. Like, you can beat that trader in the markets just by being disciplined. You know what I mean?
Yeah.
Yes, you need to have a system that works. Yes, you need to have all this stuff. Yeah, blah, 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 blah. That's all true. But if you have the discipline, that's a huge part of it. And I attribute the discipline to the reason why I was able to go through school and get a PhD. Like, it was only because I was disciplined. It wasn't because I was super smart. Like, that should be clear to all the listeners, right? Like, that's obvious, right? And now I wasn't the smartest person. I wasn't this or that or whatever, or, you know, I just tried really hard and I set my, you know what I mean? I set my, my goals up, my schedule up. I did the work. You know, I literally got bounced doing my PhD. You have this thing where you defend it. They actually said no. Like, usually it's almost usually
It's
I'm
almost
serious.
guaranteed, right?
Yeah, it's almost guaranteed. Right? It's
Yeah.
almost a guaranteed thing that when you go in to defend your dissertation, you have this committee of 5 professors, and they read through it. You give it to them. They have to, they have it for a couple of weeks. They read through it, and then you go in there and they ask you questions, and then they like pass you or fail you. And they failed me. And I'm not going to get into all the politics about that because I think there were some. But the reality is, I kept pushing on, and I said, okay, well, what do you want me to change? And they told me, and I said, okay. So 6 months later, I came back and did, made the changes and did it again. So, that was just by being disciplined and keep going and hammering away at it, and not, getting discouraged or whatever, or trying to do so, or just throwing my hands up and going, whatever. Like I saw today, actually, I went surfing this morning and I saw a guy in like one of those scooters, those motor scooters, right? And you could tell he was ill for whatever reason. He wasn't that old, really. He's probably in his 40s or whatever, but he was like, really sickly, and he was in this motor scooter. He wasn't even like a big guy. So something was wrong with him, right? Mm-hmm. And I was thinking about this other guy that I've seen all the time on the beach. Same age, okay, as the guy that was in the scooter. And I don't know what's wrong with this dude, but he basically has one leg. And what I mean by that is this guy runs on the sand. He sprints up and down stairs, and one of his legs is basically useless, okay? And it's like all bandaged up and stuff. Like it almost looks like it's like hanging, like they told him, dude, we got to amputate your leg. And he's like, no, I'm going to make it work again, Like that's what I imagine, yeah. And it's kind of the difference between these two guys. Like the one guy's like, oh, okay, screw it. I'm going to have to be in a scooter for the rest of my life, And the other guy's like, no. And he literally is like, you see him going up the stairs on one leg. He's like, and he's like making all these noises and stuff. Like, dude, the guy's going to die. And you'll see him on the sand. Like all these people are jogging on the sand in the morning. And he's like on one leg going, I'm like, dude, this guy's crazy. But he's disciplined. You know what I mean? He wants to. He's trying to get back to where he was. It's clear, that's what he's trying to do. So anyway, I just thought that was an interesting analogy, and it's exactly what you're talking about. Discipline,
yeah, no, totally. Like I
it
knew
wins.
This guy, I didn't know this guy, but I used to play against this guy in high school in soccer, and he was okay. Like we didn't know about him because he wasn't like spectacular or anything. But same thing, like he worked his ass off. He made it to he played for the Houston Dynamo, I think, in the MLS.
Really?
Yeah, and then he has like one of the top 25 goals of all time because he scored a bicycle kick in like the MLS final or whatever. And when we played that guy in high school, he wasn't like anything special, but he worked his ass off and he got there, and he's like a legend now at the Houston club. So I think work and discipline really do trump any kind of skill that you have or anything like that.
Yeah. And that's why you don't, you rarely see someone who's super like you're saying, like in sports, you rarely see someone that's so like just transcends sports. It's those people that have the two, like they're really talented and they work their butt off, and that's so rare. It's usually one or the other, right? Like you usually have someone like they're super talented and they just kind of like ride that talent. Sure, they work. I'm not saying they don't work, but they don't totally push themselves. And then you have your friend or the guy that you knew that you played soccer with. He's the opposite. He's like got some talent, right?
Yeah.
Maybe average talent, whatever. But he worked he worked so hard to get to where he was at, and it should be this should be a message of hope for you traders. If you're kind of struggling right now, just know that discipline is what will do it. Making that time to back test, making that time to check the charts, just cracking it every day, even if it's only 20 minutes, working on your strategy, working on getting your data, doing your back test, whatever it is. It's a big deal, and it all adds up, So
yeah, it does. And I think it's also kind of hard to sometimes see like inspirational stories from traders. So I think it's also useful to like look at other areas of life and see, these people who have succeeded, even though they weren't the best or most talented in the beginning, and then just kind of draw some inspiration from there also.
Absolutely. Yep. Yeah. Absolutely. Biographies are great for that sort of thing.
Yeah, for sure. Okay, cool. Thanks, Walter.
See you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I've been experimenting with actually putting on your arm. So like I have this case that holds it, and then I put the sensors on my arm. So we'll see how that goes. But
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, you turned me on to the Neurophone. So I just wanted to tell people about it, what your experiences are, and I can share some of my experiences also.
Yeah, sure. So there's sort of like two ways, I guess, that I see it for use, and we'll put a link in for people who are interested. I think their new ones aren't really the Neo Neurophone. I don't think they have them anymore. I think you have to get like a used one, but you can probably find them. So unfortunately, the inventor, he's died, so I don't know what the plans are, if they're going to be making any more. Maybe his wife will commission another lot of them or whatever. So basically, the device was invented by this guy named Patrick Flanagan, and what it was meant to do was help deaf people hear. And the way that happens, it pulls sound in, and it actually, instead of echoing the sound off your ear canal like normally, and what happens is it kind of, you put these two pads, they look like electrode things, and you put them on your head, and you actually hear the sound through your skull, which is really kind of weird. So that's one thing. And you can actually learn, like they say, that you can put, almost like hypnosis, how you get hypnotized and then they give you suggestions. You can kind of do that because it can entrain your brain waves so that you're at a certain level of alpha or whatever, and then, or theta, and then you can put information like how to speak a language or subliminal thoughts that you want, like any sort of suggestions, you can put that in there. So you can kind of get really relaxed and then plug in an audio source, and then you may or may not hear it, but the idea is that it actually will be in your subconscious. I remember for the longest time I couldn't hear it, and then eventually I did hear it, and I was like, oh, okay, I could hear, the subconscious, like the audio input. I could actually hear it if you're quiet enough, And so that's kind of the way I see it, is sort of using it for two different ways. And the research is that they had these gurus, that were meditating out in India in the caves for decades. They tested their brainwaves, and they found that it was really interesting that they had all of their brainwaves elevated, which is normally not the case. Normally, we humans have one or another. Like you and I would be in beta right now, which is sort of your waking state, and that's sort of the dominant brainwave. And then maybe when you're relaxing, watching a movie or something, and then it becomes alpha, and then maybe when you're sleeping, you're down into theta or even delta at certain stages. So there's kind of like one brainwave that becomes dominant. And what they found with these gurus, these meditative dudes, that they like had all of them elevated, and they found that the same thing would happen for people when they were using the Neurophone. It's kind of like a brain tool, subliminal. So if you know about brainwave entrainment, you can get your brainwaves to a certain level. You can also put some inputs in there, like subliminal information, and you can read books in a way. Like when I say read, like read books, plug the book in, or the audio book, and see if you know what I mean, if you retain that. So it's kind of a fun tool, but I've misplaced mine, so I've been looking for it, and because I really miss it. And I know you can find used ones. There was a guy in Canada that had some of the older ones, not the new ones, for sale. Maybe we can find that link for people. But what did you do? What did you find?
Yeah, no, totally. I found that I can concentrate a lot better, and then I actually get this like ringing in my ear after I use it, and that's, some people would say that's what, tinnitus or whatever that.
Tinnitus,
tinnitus,
yeah.
Other people will also say that that's because you're more sensitive to more subtle energies or subtle frequencies. So I tend to think it's the latter. So, but just from a cognitive perspective, like I can focus better. It does help with learning things, and I haven't done the language thing yet. That's right. My next thing also. You can actually get the older one. This is the older one.
Yeah, that's the older one. Yeah.
You can get it brand new from Canada, and if you pay in Bitcoin, he gives you like a $50 discount or something.
Oh, really? That's awesome.
You got to trust the guy and stuff. But that's been my experience so far, and it's been really helpful just to like kind of zone in and concentrate.
Because they were talking about making another, because they sold out of the Neo Neurophones, and then they made another. They said they were going to do it again, like make another lot of them. But then for some reason they said, nah, we're not going to do it. And so everyone was like, oh, I'm sure you can find used ones out there, like, or older ones or whatever, because he had several versions. I mean, I think he invented it like in the 50s or something. Like it's really
you see, like, the old school ones with like the tube sticking out and all that stuff.
Yeah,
that's pretty cool stuff.
And did you hear the story about how they got the patent? The story about how he got the patent is really cool. How Patrick was young. he's 13 or 15 or whatever. And his dad said, well, I know a patent lawyer, and they applied for a patent for it, the neurophone. And the patent office came back and said, no, there's nothing out there like this. So patent rejected. he goes, well, where would I get something protected that has never been invented before, if not the patent office, And what they were basically saying was, we need to see science that links up all the elements of your, patent. And so they said, listen, if you come to DC, and we've got a deaf person in the office here, come to DC and show it to the deaf person. We'll plug them in and all that. And if it works, we'll grant you your patent. Because usually once they reject it, that's it. That's the story, is that typically you do not get there's no appeal or whatever. It's like, nope, patent rejected, boom, that's it. So yeah, and they did, and they plugged it into the person working there, and they started crying because they could hear again and all that. And so it was like, because they played her favorite record or whatever,
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And so, yeah, she could hear again. I guess she must have had hearing and then lost it, and then got it back with the neurophone. But yeah, so it's a really interesting device if you're into those sorts of things. Yeah.
Yeah. How would it apply to traders, would you say?
Well, what I used to do, I used to do exactly what you were saying for concentration. So I would put it on, and then I would look at my charts. So in the morning, my routine is that in the morning, I wake up and I kind of look at my charts and see what is there anything that's looking good? And then in the evening, which is when London is trading, that's when I actually kind of put my orders in, right? Usually, that's how I usually trade. What I would do is actually put it on in the morning and then go and look at my charts. Because I found the same thing that you're saying. Like, it really kind of, you feel like switched on. And I used to, when we did podcasts without the cameras on, I used to wear it on the podcast the old podcast that we did, the Truth About FX, I was always wearing that on, you know what I mean? Like, I had it on my head. Yeah, I found the same thing you did, basically. Like some people use coffee or whatever, but it's a really good way to kind of, like, if you're doing back testing or you're making any sort of decisions that you want to be on point, I would definitely say, yeah, that's something to use.
Yeah, and I think if you do some positive affirmations or whatever, you could probably feed that in also, right? That's what I've been doing, and I think it's been helping. I've been experimenting with actually putting on your arm. So I have this case that holds it, and then I put the sensors on my arm. So we'll see how that goes, but I just started using that.
Some people get shocked. Did you know that? Have you ever let someone use it and they are like, yeah. No, I did that to my friend, and he was like, get that off me, I think you can make it more intense and less intense and louder and
whatever.
Yeah. There's a volume and there's an intensity, and so it's kind of a different. So everyone's going to react differently, like they said,
Yeah, but just another cool tool to experiment with and see if it works for you, right?
Exactly, yeah.
Okay, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I could go right now in the grocery store and we could buy, $50 worth of ice cream if I wanted to right now or whatever. You know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what are some ways that people can feel more wealthy? I know that a lot of people have this poverty mentality or feeling of lack in their life. What do you think are some ways that people can boost their wealth awareness?
Okay, so what I did, people say do visions and stuff, think it, get really relaxed and imagine yourself in the future or whatever.
Yeah.
There's that, and there's vision boards where you put things on, you cut pictures out of magazines or whatever, whatever you want, and then you put it on to paste it and that's what I want. There's those sorts of things. But there's actually a book that came out. Recommended it to people. I'll put it in the show notes. It's called Ask and It Is Given. And it's really cool because it has all of these techniques that you can use to kind of help yourself with your mentality if you feel like you're saying, like you feel kind of poor, you feel like things are never getting better or something like that. And it's really cool. Like I'll give you one, for example. So in the book, there are lots of them. And it actually talks about in the book about levels of emotion. So they're saying like, if you're down here at like full on depression, you don't just automatically switch on and become like, ecstatic. Yeah. So they have like this scale of emotions and they say, look, all you really want to do is just move to the next one. And then once you're there, try and move to the next one. And like, it's like go up the ladder slowly. There's no reason, like if someone's depressed / suicidal, you can't say, oh, you have so much to live for. Like, come on, let's go on holiday. Like they're not going to, they're going to say, no, get off, get away, go. So that's really cool just to see that. But here's one that's cool. Like, let's say you're like you say, like, you feel like maybe money's been tough and is it ever going to get better? What you do is you get like a $50 bill, or in Australia it's 100 because everything's more expensive here. But you put it in your pocket or in your wallet or your purse or whatever. And what you do is when you walk around, you just say to yourself, like you look in the, like, oh, there's some shoes right there. Let's say you're a lady, right? Oh, I like those shoes. They're kind of like the ones that I wear. And, I could wear those with my dress or whatever. And then you think to yourself, well, I could buy that right now because you have that $100 note in your purse or whatever. Or you're walking by a restaurant and, with your wife or whatever, you think, oh, well, we could go there right now because I have that. You know what I mean? Like what you're doing is you're trying to create this mentality of, instead of keep thinking and cycling through your mind, oh, I can't afford it, I can't make it, I can't do it. What you're saying is I can, and you're becoming more positive relating to money. And you never really spend that thing. And you don't put an IOU in your wallet. Like that doesn't work, right? It's got to be the real money.
Yeah.
And it's not a credit card, it's not anything, it's real money. So you actually pull the money out of the ATM. I know no one wants to use real money anymore, but you take that real money and you put it in your wallet, and then you just remind yourself every time you walk by the toy shop with your kids. Oh, I could buy that toy for my kid. I could buy, that hat. I could buy that those pants. Whatever. I could go right now in the grocery store and we could buy, $50 worth of ice cream if I wanted to right now or whatever. You know what I mean? You just kind of like keep that. It's just a way of reminding yourself. When you walk by something and you see something, you think, oh, I could do that right now. Oh, I could go joyride right now with an Uber. I could go on an Uber joyride because I have $50 in my pocket, or whatever. So that's the idea, is that you would do that. So, yeah.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Cool. Yeah, I mean, it's funny that you mentioned that because I've used that actually quite a bit. Like several
years
ago, I started that habit, put a $100 bill in my wallet, and it really did help. It helped a lot. And it also helps because if there's some cash situation where somebody's going to pay with their card and you have to pay them cash or whatever, or the place only takes cash, then you also have that confidence of having that in your wallet, saying, oh yeah, I could cover that. I don't have to go run out to the ATM or whatever. So yeah, I think it's a super useful exercise.
Yeah, and you get to the point where you'll just always know that it's there. It's a very comforting thing to know that, like, yeah, I can afford it because you can. Because it's right there. It's in your pocket. Like, it's not. Yeah. So it can go a bit. It can go a long way. Just doing that and just keeping that in mind. It's like you'll just be at a different emotional state all day because you know that. And in the beginning, you might forget that you have it, but you just have to remind yourself. And then after that, a couple of weeks, it's like boom, you'll always remember.
Yeah, totally. And I think it really is a good step from that lower level to the second level, or maybe like a mid level, right? In terms of psychology about money.
Yes. Yeah, absolutely. Yeah, it's great.
Cool.
Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Oh no, that didn't happen. It's terrible, right? Like, it's the worst thing ever.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk a little bit about catastrophizing when we do this in our everyday lives and how that kind of carries over to our trading.
One interesting thing, and this might help some people, just kind of as it's true that did you know that intelligence is negatively correlated with anxiety? So that would mean that if you wanted to act smarter than you really are, just kind of say everything will be all right. So it's kind of like the antidote, right? You just say, no, but I guess there's two ways that I know of for that. You can read the positive psychology guy. He's written a bunch of books, but I can't remember his name now. He came out to Sydney and I saw him. Anyway, I'll post it in there. The Marty Seligman, that's it.
Oh yeah.
Martin Seligman, yeah. So everyone calls him Marty, but he thinks it's weird. He says he never says for anyone to call him Marty, and he doesn't even think of himself as Marty, but everyone calls him Marty. I thought that was pretty funny. But yes, so for catastrophizing, you can adjust it like logically and say, like, for example, as a trader, okay, I've had 7 losing trades in a row. Obviously, my system doesn't work. I'm never going to make it as a trader. I'm going to lose all my account, and I'm going to have to start all over again, because the strategy doesn't work, right? That's like a slippery slope sort of catastrophizing thing. So another way to look at it is go, okay, let's go look at my historical data. When I tested this in Forex Tester, did I ever have 7 losing trades in a row? Yes. How likely is it to happen? Well, you can actually work that out. I'll put the risk calculator for people who want to use that. You can use the risk calculator to see the likelihood of that given your system. We'll put that in show notes too. So what that means is you're using logic to reassess the situation and kind of put it in its place in a different way. That's one way to do it, is logically. And the other thing to do is kind of more of an emotional thing. What you're doing is you're convincing yourself that you are on the right path. And so it's a little bit different to logic, where logic is kind of like trying to drop a bit of, antiseptic into the wound and make it heal, right? And say, look, I understand why you're saying that and why you'd feel that, but it's actually not reality, right? This is not likely. And then the other way to do it is to kind of like focus on the feelings that you had when you discovered your strategy, when you tested your strategy, and when you saw that it worked. And think about what it's going to be like in the future after you've been trading this strategy for a couple of years or whatever. Where will you be at financially and that sort of thing? So you're kind of trying to use the emotions, and you can use hypnotherapy for that or any other of your favorite ways of seeding your subconscious. Those can also help and get you in that direction. But most of the positive psychology research, what they do is they give you specific tools like the one that I just talked about, which are like, trying to shift your focus and look at things slightly differently and say, what am I looking at here? Is it a normal sort of drawdown, normal sort of losing streak, or is this something totally different? What do you do? What do you use? Or what have you found?
Well, one thing I found really helpful was just being more aware about the words that you use. So for example, a lot of times people say, oh, I need to go to the store. Well, you don't need to go to the store. I mean, it would be nice. You might be able to make some dinner, but you don't need to go to the store. And I think that's kind of where the catastrophizing starts, is where we pick up these phrases from our friends, our family, or whatever, right? And then that kind of gets ingrained, and it becomes like we need to do this. This has to happen. Oh no, that didn't happen. It's terrible, right? Like it's the worst thing ever. Well, you lost a few fries, you dropped a basket of fries. I think you'll be okay. I think that's a really important one too, where we have to realize how we speak to ourselves, how we speak to others, and how we take in the information from the outside, like from the news or from other people also.
Yeah, absolutely. Yeah, what you're saying is so true. It's when you have kids, it's like, I need this toy, I need that, and I don't know if you really need it. It's a sort of same sort of thing, right? Yeah. I think you kind of nailed it. Like, it's interesting, there's this debate in psychology whether or not they dream in images or if they dream in language, in words. And I had the experience, I spent a lot of time in South America and Central America, and I had the experience once where I was dreaming in Spanish. And so then it just kind of shifted my thinking. I was like, well, maybe you do sort of dream in words or something. It was weird that I had that experience and that my thoughts were in Spanish, in my dream. And so,
hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
To follow up what you're saying, that's exactly what a really good approach would be, what I would call a positive psychology approach would be to do that, to kind of reframe. What you're trying to do is reframe the situation, because when you catastrophize, usually you have negative emotion associated with it. So it's actually easier for you to fall into the trap of that faulty logic, right? Mm-hmm. Because you just feel so bad, right? It's like someone who's suicidal and you say, "Oh, cheer up, let's go, start a charity or something like that." Like, so someone who's suicidal is not going to want to start a charity, right? Like you're on a totally different emotional level. So yeah, so I think part of it is exactly what you said, is just kind of shifting, just a slight shift up to the next higher emotion. And that can come through words for sure. Absolutely. Yeah. And the other thing you can do is get another perspective. Like if you have a trading accountability partner, someone you talk to, you can show them your stuff and say, "Well, what do you think?" Mm-hmm. And like, I think this, and do you think I'm off base here? And that's another way, just to get another set of eyes and see how someone else looks at it, who's kind of a little bit more detached from the emotion of the experience of going through that tough time, which is usually, obviously, for traders, it's usually a losing streak. It usually is that. It could be something else. It could be, relationships and people who don't believe in your trading career. It could be feeling like you're never going to find a system. Those things can also be the case. But normally what happens with traders is we get into a losing streak, and that's when we start to think, "Oh my, this is it. This is the end of it. It's all done."
Yeah.
And so that's tricky. Yeah.
No, that's a really good point. Yeah. I mean, I think the bottom line is that we're a lot harder on ourselves than we are with other people. So if you can get that outside perspective, or you can say to yourself, "How would I talk to my good friend about this?" And I think those are good perspectives to have also.
Absolutely. Yeah. Yep.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Back in his day, they didn't have such a thing as, Prozac deficiency or whatever. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, so we're on the topic of trading psychology, obviously. So Jesse Livermore, how would you analyze his psychology? What do you think were good parts of his psychology? What do you think were the ones that brought him down?
Well, my favorite quote, and I used to have it. I don't have it up anymore, but I used to have it. It was said, I can post it for you in the show notes for people. But he said something along the lines of, "I always made my money by sitting and waiting." You got that? It was by sitting and waiting. Plenty of traders or men, I think he said men, can be right about the market and buy at the exact bottom and sell at the exact top, but there are very few that can actually hold on to it. To me, that kind of sums up what was good about Jesse. Now, the bad things are obviously, people don't talk about this a lot, but he killed himself. And one of the reasons why he killed himself is he went boom and bust several times, just like the markets, in his time. He went up and he went down. He made it all and lost it all. And that was because he went really hard with his risk. So, you can learn a lesson in that, in trying to figure out a way for you to avoid hitting rock bottom like that and not losing it all. So, that's the other part of it. He may have had, today probably they would have put him on Prozac and, said that he had he's bipolar or whatever. Probably, I don't know.
Yeah.
But, back in his day, they didn't have such a thing as, Prozac deficiency or whatever, whatever the diagnosis is.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, so I think the real lesson with Jesse is, and it's the same with the Darvis. Nicholas Darvis was similar too. If you read his book, Nicholas Darvis, How I Made $2 Million in the Stock Market, which doesn't seem like a lot, but back in, in the 50s it was or 40s, whenever he did that. Yeah, so I think sitting and waiting and learning how to be patient with your winners is good. Possibly pyramiding if you like pyramiding and adding two winners. The thing to watch out for is the risk part, and you don't want to risk so much or just be so convinced that you're right that you just pile it all in, because if that's the case, you can obviously run into a big problem, right, by having too much on the line, and then it's absolutely devastating if it doesn't go right for you. So
yeah, true. And I think if you do have that kind of personality where you know you're good at pyramiding or like scaling up your winners, I think once you are done with that campaign or whatever, you have to take all the money out, just leave a small amount in there and build that again. And then if you blow that out, then you're okay. But I think there's a tendency, right, to put all the money into play, and you know, you lose everything.
Yeah, totally. And it's fun to do that. It's fun to take off a little bit and get really aggressive with it. I mean, it sucks when it doesn't go well, but once in a while it will, and you don't need it to go right that many times, you know? Like I have a friend, he does that too. He takes out $1,000 and he'll run it up sometimes. He'll run it up. When he gets to over 100, he quits. So he goes from 1,000 to 100. But a lot of times it doesn't work, you know. And so he's down 1,000, down 1,000, down 1,000. You know, imagine doing that 11 times, and on the 12th time you hit 100 grand, you're up. You're still up, right? You're up 88,000. So yeah, so it's not a bad approach, but it's kind of a way to get around it, isn't it? If you have that tendency, it's a way to kind of funnel all that energy into your little account where you're going to be super aggressive instead of risking it all, you know? So it makes a lot of sense for a lot of people.
Yeah, true. I know this guy who he knows Larry Williams, and Larry showed him this thing where he put in on a trade for like $3 or something like that, something small, and I made like $100. He was like, "Wow, how do I do that again?" He said, "Oh, do your own homework." But it just outlines the Larry's mentality, right? Just bet a small amount and try to make a big amount, and if you lose it, then no big deal.
Yeah, absolutely. Yep, that's right.
Okay, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
You decided to take a profit, and you've decided to let it run. And you've also decided to let the computer do both. So you know what I mean? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader. He's writing in and he's like saying that he doesn't really have the patience. He knows that he needs more patience with his positions, with his winners, but he keeps pulling out of the trades, the winning trades, too quickly. And he knows that this is the case. He said, well, what should I do? And I said, well, look, this is what I would do. A couple of things you might look at doing. Number one is, first of all, you can split your positions up. So if you're worried that, you know, you should be taking profit now because it's up, and you're worried that you're going to lose all that profit, then just split it and have some sort of a target. And then for the remaining bit, have a trailing exit, right? Which is what I like to do. I think it's kind of fun to have one. Sometimes your trailing exit will make way, way, way more, but a lot of times it may make a little bit less or around about the same as the original, you know, the position where you had the target. That's thing number one. Thing number two is try and see if you can automate your exits. That way you don't have to think about it. So if you're going to do that, let's say you go, I'm going to go 2-to-1. So I'm going to risk 50 pips to make 100 on half of my position. On the other half, I'm just going to run my trailing exit. You can put a script on there. It doesn't matter which platform. Almost all of them will allow you to do this. And so what that does is it takes you out of the equation. So once you take the trade, you know, well, I've made my decision, which is to take a trade. Now the computer will do the rest. It will get me out of the at the target level, and or I'll get stopped out, and it will get me out of the trailing exit, or I'll get stopped out. So it's kind of an easier way to. What's happening is you're shifting that psychological burden off of you and onto the machine. Now you can still jump in, and you can still turn it off, and you can still all that stuff can still happen, but in theory, if you are doing this and you're doing it correctly, you're not going to have the issue of, you know, having to deal with that psychological burden of, oh, I made the wrong decision, or and how do I know if I'm making the right decision? Because you've decided to do both. You've decided to take a profit, and you've decided to let it run. And you've also decided to let the computer do both. So you know what I mean?
Yeah.
It's no longer in your hands. So that's one way to do it. And for some people, that's a really easy way to deal with that, even though sometimes we feel like we want to make the right decision. If you do that, you're almost always, if you have a winning trade, that is, if you have a losing trade, it doesn't matter. But if you have a winning trade, it almost always feels like you've made at least a little bit of the right decision.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
If it really goes and your trailing exit is able to take some of that profit or a big piece of that profit, you feel really good. And if it doesn't really go and your trailing exit, gets a little bit, very, very small profit or around break even or a little bit of a loss, and then your target actually makes money for you, you feel good too. So it's kind of a nice way to deal with that. And obviously there's lots of other things that can happen, right? Like you could get stopped out, or you could lose on the trailing exit, which happens for me sometimes, and yet make money on the target, depending on how tight your trailing exit is. There's lots of things in there. It's not an either or situation. For some people, that's a very good solution. Yeah.
Yeah, those would be my first two recommendations also, but maybe like a distant third one would be just practice more, right? Like practice, go into Forex Tester and just practice the setup and the exit, and just review your journal a lot more and look at what happens when you stick with the exit or the trailing exit, and that can help you bolster your confidence to stay in the trades, I guess.
Yeah, and I've done tests on that, like where exactly what you're saying. So you get your Forex Tester data, and you go, okay, what if I use this trailing exit versus this one? And you see the difference, and that can convince you that it really is worth it. Even a lower win rate and a trailing exit that's going to yield a lower win rate, but more profit overall, because it allows you to have really, really big winners occasionally, and that makes all the difference. So yeah, it's a good point that you should definitely think about running that sort of, I call it an exit race, where you have these two different types of exit. You want to see which one is going to be the winner here, and try that multiple times. And it can, especially if you're just using targets now and you're not using a trailing exit, like that's a real easy win in a lot of cases. Not always, but in a lot of cases. So yeah, that's a great way to show the logic of being more patient, and so it makes sense. You go, well, I can see why I should do that because it's actually going to help my trading quite a bit. So yeah.
Cool. Yeah, great point. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Hey, Walter. Where are you today?
Yes, I'm coming to you live from the spaceship. No, I just thought it would be cool to switch it up, Hugh, and, give myself I actually didn't know this was possible. For those of you watching the video here on YouTube, apparently on Zoom, you can change your background. So I'm up with the times, and I have now decided to go into outer space.
Nice. Awesome.
Yeah.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So today's question, I think, is do you think anyone can succeed at trading?
Anyone can succeed at trading. I guess I'd have to say no. I want to say yes, but I guess I have to say no, because it's kind of like, to me, it's kind of like the question, can everybody walk? And the answer, unfortunately, is no. Some people won't walk. Some people have issues, physical issues, and they're born into bodies that don't allow them to walk. So yeah, I'd have to say no. And so we know about the turtle experiment, which was basically the core of this issue, which is one guy, William Eckhart, said, some people are either born with trading skills or they're not. And Richard Dennis said, no, you can teach anyone. Even then, they filtered people out. So they only took people that they thought would be good students. Yeah. And even then, they did have at least one student that I'm aware of who didn't do well. So
I think quite a few of them kind of blew out at some point, right?
Did they? Yeah. Okay. Yeah. See, I wasn't aware of that. Yeah. Okay. So now that doesn't mean that those people couldn't trade. It just means, like I've blown out too a few times. You know what I mean? Like, so I think I want to say yes, that if you stick with it long enough, if you do the right things, if you go through the right process, you can do it, you can make it work. However, I do believe that there are some people, just like there are some people who are born with, actually, I'll put in the show notes. I was fascinated by this. My son and I found on YouTube this group of people. I don't know if they're on an island or something. It was fascinating. So what they call them, like the missing link. So you know how they say that we evolved from like shrews, the shrew turned into like an ape or whatever, you know, or orangutan or whatever. And we ended up, well, these people, they're people. They look like people. They actually have clothes. I don't know where they get their clothes from because they seem like they're totally isolated. They walk on all fours. So they don't actually stand up. Okay. And so all these scientists are like, oh my God, we found like this kind of like this missing link between when we were like sort of ape-like or like, you know, monkey-like, primate-like, and then human-like, where we decided to stand up. And these people, and it's so weird, like you see this grandma and she's like walking around and they're walking around on all fours on the beach, right? You know, what do you say about those people? Are they genetically predisposed to be unable to walk on two legs? I guess so, because their brain is set up, that's how they move. That's their locomotion is walking on all fours. So I would say that there are some people that have impulse issues, basically gambling / addiction issues, and they will not stick to the risk rules. They will not stick to the rules of the system, and it'll be extremely difficult for them to actually adopt profitable trading habits. So I would have to say, no, not everyone can. My hope is that everyone can, but my belief is, you know, if you really look at it truthfully, there are some people that just, they won't buckle down and they won't follow the rules that will lead to profits. So yeah, what do you think? What do you say?
Yeah, that is a tough one.
Tricky. It's tricky.
I think if you take it with the caveat of the person has a normal functioning brain or normal cognitive abilities, whatever normal is, I believe that everybody can, but not everybody has the desire nor the perseverance. And like you said, some people have these demons, right? Like these addictions, these whatever they're working on. And I think that if you can overcome those things, I think then you can become a trader for sure. But I think, they really hold you back. But so ultimately, I think if you can overcome everything and you have enough, you stick to it long enough, you have enough will, you really want this. And I think most people can make it happen. But not everyone, I think, can become a trader, and nor should everybody, want to become a trader, because maybe you're better at basket weaving or, something else. So I think you should do whatever feels good to you.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, and it's like a lot of things in life. You'll know, like, who your friends are, who the people are that you get along with, and the people, like, you almost know immediately whether or not you'll want to see, like, if you meet someone at a party or something, you'll know, like, oh, that, she's pretty cool or he's pretty cool, and I wouldn't mind hanging out with him or whatever. And it's the same thing with, like, trading. After a while, you'll figure out, like, okay, this just isn't me. Maybe I should go sell adult toys on Amazon or whatever. Like, maybe this is not my path to, you know what I mean? Like, this is not my way to do it. What I found is that a lot of people who are attracted to trading, they kind of like the idea of the markets and they like the idea of trading, and they get into it. There are some people who are attracted to trading just like they were attracted to selling stuff on Amazon, or, just like they were attracted to flipping houses or selling Herbalife or whatever. It's just kind of another vehicle. And that's cool too. But I feel like those people, and I don't have any data to support this, but I just have a sense that they're more likely to give up. Like they're not the type of person that would stick with it. That's just my intuition. I don't know if that's actually true. I don't know.
I think there's two sides to that. You could also say that they're just trying different things out, and then they, settle on the one that maybe works for them or whatever. But I'm kind of with you too. I've seen more people jump from thing to thing to thing, and then just finally give up and go to their job. So I think totally. Yeah. Like, you get those people, like I run into those people, like they're like, oh, I'm going to be a blogger, and then you see them again, like, oh, I'm going to do Amazon, or, oh, I'm going to do no money down housing, or I'm going to rent out Airbnbs, or, like there's all these things, and they're like, oh, I'm going to do, whatever it is. Oh, I'm going to try Forex robots now. Okay. Now I'm going to, do options. Now I'm going to, and so
And you're just like, okay, cool. Like, just, they're trying it out. Yeah, maybe that's what's going on. They're trying to, like, I did that when I was younger. I was really interested in religions. And I'm like, okay, I've only been exposed to a really limited amount, like in terms of the world religions, like in the way I was growing up. So I was like, when I went to university, I studied religions. I got like a minor degree in religions because I was like, okay, what is Hinduism? What is Buddhism? What is Zoroastrianism? Like, what is all this stuff? Like, you know what I mean? And it was really cool, like, to figure it out because I was in that stage. And I think people get that way too. Society in a way kind of encourages us to not necessarily settle on an occupation. And, that was different, I think, for our grandparents, where they were almost like born into a thing. They kind of knew based on their family, what their family did, what they were going to end up doing. Working on the farm, like both my grandparents, they were born on a farm, working on a farm, like that was their thing. And so, so I think today we have a lot of flexibility in terms of finding what our occupation. And they even tell you in college. I remember in college they said to my mom, son or daughter is probably not going to get a job in his or her degree. They also told her that it was going to take 6 years to graduate, which I think is like setting them up for, you got to keep paying. You got to keep paying. Yeah, which wasn't true. It took me 2.5 years to get out, but they said it was going to be 6. So you know what I mean? It's funny how they do that, like kind of set the expectations. And so I think in a lot of ways, because there's so much information available to us, we get to try different things out and see and taste it and see if, okay, this is for me or this isn't. And so in that way, it's pretty cool. I think it's cool that more people are trying trading. And from a selfish point of view, we use those newbies, like those are the people that we get our profits from. The newbies coming into the system who don't know what they're doing, we can, like, those are the easy prey, right? Like that's how we can pull our profits out as retail traders from that group. That's where we're getting our money from. So, and they learn a lesson. You either learn your lesson and get better at this, or you move on to the next thing. So
yeah, it sounds a little harsh, but like it's kind of like a fraternity or whatever. Like if you can overcome the initiation, then you're in, right? And similar thing in most any profession.
Yeah, like sports. Think about sports. I was thinking about this. All the kids, the 6-year-old kids that play soccer, and then how many people are playing soccer at age 26? It just totally filters it out. Yeah, it's like that in everything. You're absolutely right. Everything in life, in the end, the cream rises to the top, and that's it. That's just the way it. Yeah. So.
So just find the place where you're the cream, right? I guess
exactly. Yeah. Where that is the take-home message. Find out where you're the cream, and then go for it, and then rise. Yeah, that's right.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
I personally don't think there is such a thing as ADD. Like, I think it's just a ploy to sell more drugs.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, what do you think about this concept of ADD? And, some people say, ADD is getting in the way of me trading successfully. What do you think of that?
That's an interesting idea. Here in the spaceship, we have no place for ADD. Everyone has to know their place, and everyone
can't go off anywhere else.
No, we will all die. Yeah, that's right. So ADD, you know what's interesting about that, Hugh? And I had this professor in graduate school who was talking about how his idea was that ADD was this construct that we have, and it's kind of like a new idea. And like in the past, he was very evolutionary, sort of biological. That was his sort of his bent on psychology. Mm-hmm. And he was saying that those guys would have been in the past the lead hunters, the king of the tribe, mm-hmm. the one that got the most crocodiles, from the river, that sort of thing. The ADD guys, because they were always. And he said that what's happening is we're creating a new environment for people, like the classroom. We're supposed to sit still, look up, pay attention, listen to the teacher, all that sort of stuff. And so it was like we had these hunter-gatherer bodies that were kind of put into this new situation. So in other words, the diagnosis is the problem. The ADD diagnosis is the problem. So, okay, so the next step is, what about trading? All right, so here's what I think about this. You can construct a situation where your ADD is mitigated, and you can also channel it. So if you have like a checklist and you go, okay, I have to have all these things lined up for me to take a trade with this system, and you have someone every week that says, okay, let's see which trades you took. Show me your checklist, show me what happened, show me why you took the trade, why you didn't, whatever. Why did you risk this much or whatever, right? So you have checks and balances. You have a list of things you know you should do for every trade, and then you have someone that's going to look over it every week and say, well, did you do what you said you were going to do, right? And then the other thing is, if you really have a lot of ideas percolating, why not just channel those into your system building, right? I think that's the level, like the creative output for traders can be in system building and coming up with ideas and looking at different things and how can you use those ideas that you have, to take trades. So I really think that you should separate it. So you should become very regimented in the way that you trade, and the way that you keep your records, and the way that you score yourself on your trades. And then you can become more creative in the way that you kind of create strategies and come up with things to test. So to me, that's the key.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And if you even need to have a small money account where you actually take live trades on your creative ideas, you can even try that. Just, again, try and keep them in records so you know which ideas are working for you and which aren't, right? So kind of, track that and tag that. So yeah, that's what I would say. What are your thoughts on that?
Yeah, I personally don't think there is such a thing as ADD. Like, I think it's just a ploy to sell more drugs. And like you said, I think it is those people who are the movers, and they need to be kinesthetic, and they were the hunters back in the day, right? Yeah, I think that the education system just is not built for them. Like you said, it's not tailored to that type of learning, and they're geniuses in other ways, but they aren't like book learning geniuses. I think on top of what you said, that's a good thing to go through also. But I think maybe consider, if you're that type, consider like day trading, right? Just day trading for maybe like an hour a day. And that kind of fulfills your need to like flip between different pairs, and you're kind of like on the hunt. And then you just spend that 1 hour of disciplined trading, and then you can go on and do something else with the rest of your day. So that's another thing that I think could help that type of personality. But yeah, the bottom line is I don't think there is such a thing as ADD. I think it's just a different learning style.
Yeah, and you just need to constrain your different areas, because going off the reservation when it comes to trading can really hurt. Like, that's a bad thing. And I inevitably get these questions from traders where they say, have you ever just taken trades like based on where you think the market's going to go? And I'm like, no. Maybe when I first started trading, we did that. Like, I remember my roommate, when I was trading, he was like, oh no, oil's going up, man. Oil's going up, and all this stuff like that. And I was like, well, how do I, like, where's the stop loss? You know what I mean? Like, what, like, yeah, that sort of thing. And, so I think if you keep it in the, like, if you keep it penned up, it's the way to go, right? Like, in the right area.
Parameters.
Yeah.
Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
Of course, I screwed it up because when I was trading it live, I would take profit too early.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right. So in the last episode, we talked about a little bit about creativity when developing trading strategies. What are some ways that you found to, start getting new ideas for trading strategies and just getting creative with things that maybe aren't out there or you haven't found.
There's some really cool tests in psychology where they say can you come up with 30 things that you can do with a paperclip, or things like that. And there was a book, I can put it in the show notes for people that are interested, called Thinker Toys, and it's about this guy who kind of like consults with companies and tries to help people to learn to think out of the box and stuff like that. I think his heyday was in the 90s. I don't know if he's around anymore, but one of the things I took away from that was taking something that everybody sees in one way and then using it in a different way, right? So like paper clips, like when I was a kid, I could open a pair of handcuffs with a paper clip, right? My stepdad, he was like a volunteer police officer. So I had not only, when I was a kid, I was a magician, and so I did like escape tricks and stuff like that. Jump off the roof into the pool with some handcuffs and try to get out in the deep end. Hopefully, get out of that, and then, I thought I was Houdini. And then when he started volunteering on the weekends as a cop, I was like, sweet, now I've got real handcuffs. You know what I mean? I don't have like the toy ones. So I learned all these different ways to do that. And I think in trading, you can do the same thing where you go, okay, what is a moving average? All right, a moving average is used by most people to determine the direction of the trend or the market, right? Okay, what are other ways you can use moving average? Oh, you could use it as support and resistance. You could use it as an exit tool. You could use it as an entry tool, right? You could use it lots of different ways. And so that's one thing to think about is what does everyone use? Like the biggest mind blower for me was this was back in 2003, I learned the stochastic pop.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Stochastic pop, I will put the link in the show notes, from a book called The Complete Trader, but he spelled complete weird as P-L-E-A-T, Complete Trader. I don't know if that's like an oldie. Yeah. Anyway, the guy was interesting because he was like, when we were trading stochastics, we would wait till it to go over 80 and sell and wait for it to get back down under 20 and buy, right? Or get under 20 and then go back up over 20, right? And then buy, or go over 80 and then come back down below 80 and then sell. Or 30, 70, it depends on, whatever, people have different levels. But he was saying, Jake Bernstein, that's right, Jake Bernstein. He was saying when it got up to 80, buy. Mm-hmm. And I was like, mind blower, you know what I mean? Like, I was like, wow, because I was like contrarian by nature, and I was like, ooh, that's interesting. And so I started testing. I'm like, holy crap, it actually worked. His point was that usually when the market got over 80, that wasn't the end of the move. There was still a bit of a pop there. Mm-hmm. And so you're trying to get that little move higher, right? And sometimes, of course, it would keep trending, but usually you just got a nice big move up there. So you weren't buying when it went over 80 and crossing back down. You would actually just wait till it got over 80 and then you were buying. And the same thing when it got
small profit target, right? If I remember.
Yeah, it was pretty quick. Yeah, it was a quick thing. Yeah. And so, of course, I screwed it up because when I was trading it live, I would take profit too early. And then I was beating myself up going, what am I doing? And every time I go, oh, look, it was perfect if I just stuck to the rules, So I was still learning, not to take profits early, which is something really hard to learn, I think, when you first start. So that's what I would encourage you to do. Take the tools that everyone else is using and use them in a different way. Mm-hmm. Like use that hammer to eat ice cream, right? Mm-hmm. Use that moving average to do something that no one else is doing. Use that stochastic in a different way. Like, here's another one that I learned. Point and figure charts. Like a point and figure chart is like it has an X if it goes up 50 pips. If it doesn't go up more than 50 pips, or whatever the number for the box is, it could be 100 pips, 20 pips, whatever. Mm-hmm. But I used to hand draw these euro and pound charts on point and figure. And you know what I did with it? I made moving averages on the point and figure chart, and you could use moving average crosses on the point and figure chart. Totally different to what anyone else is doing, and actually a really good way of seeing the trend. And you don't get these little whipsaws that you get on normal price charts, which are normal time-based candles instead of movement-based candles, which is what point and figure are. So yeah, so I would just encourage you to look at things in a different way. Take a tool that a lot of people use and decide, hey, I'm going to use this in another way. How else could I use this in a way that I've never heard before? And does it work? That's a really cool way, I think. What do you think?
Yeah, no, I agree. I think, but like you said, I'm kind of contrarian by nature. So I'm going to figure out, okay, what is the opposite of what's going on here? And does that work? And I think you can also draw some inspiration from other areas, like maybe architecture or design or hip hop or whatever it is, and kind of figure out what those successful people did differently and how they were going against the grain. And you can kind of like figure a different way to do that in trading. That sounds kind of weird, but I think it just gives you more creativity when you do that.
Yeah, I think you're right. I think, like, I've always thought that looking into harmonics, I feel like there's something in the market charts that maps onto harmonics. I haven't figured out what it is, or like, you know, you can get into like sacred geometry and stuff. There's actually quite a few books on that stuff. But yeah, I do think there are some elements that you could take from other fields, like even physics or whatever, you know, applied the right way could possibly give you an edge. So, and it could just be our minds just looking for connections too. Like that could be it too. But who cares if it works, right? If it works, you know what I mean? Yeah. So
what do you think of this idea that if enough people know the trading strategy, it loses its edge?
Yeah, I understand why people are saying that. And I suppose if everyone was using the same robot, that would be the case. The problem is, if I give you my rules to my kangaroo tail strategy, and I give them to you, and then we give them to 500 people, and then we say, okay, now go and trade that. And we all trade the same pairs, the yen, the pound, the euro, the Aussie, the Kiwi, the CAD. We come back a year later and we look at our chart, our trades. We have different trades, man. In fact, some of us are going to throw it away 6 months into the year, 3 months into the year, and the others are going to say, this is amazing. And so that to me is the real thing about the markets, is we're looking at it through our own filter, and what I think is a great kangaroo tail, someone else is going to go, no way would I ever take that, and vice versa. So, and you know, this was really driven home to me by a book by Daryl Guppy, who's a trader. And I read this, you know, back in 2005 or 2004. His books are kind of hard to read, but he was talking about moving averages and how, you know, he would look at the market this way, and he would say you would look at this change in the moving average, and that would suggest that the market's going to go this way. He said, but like, if I tell you this, it doesn't matter, because everyone else is going to have their own way of seeing it. And it's so true. It is so true. Like I get questions from traders on our Sunday night webinar, right, that we do. And they're like, what about this kangaroo tail? And they'll tell me the chart, they'll tell me the time frame, and I'll look at it and I'll go, which one, where? Like, I don't see it. Like, you know what I mean? It should be like to me, it would be like an obvious kangaroo tail. If it was, I'd say, no, I don't think, for me, this isn't really because of this, this, and that. You know what I mean? And so, and it never fails. Like, it's so obvious. So I think it is possible. What you're saying is true. If we all have the same software, the problem is we all have different software in our head, and we all seeing it through our own filter. So I don't think, as long as we're still discretionary traders, I just think we're all trading something different, even if we have the same rules. It's crazy. I mean, it's crazy. Like, and it's crazy how people modify it. Like, if you give someone your rules, Hugh, and you say, okay, this is what works, this is what I do, these are my data, this is blah, blah, blah. You give it to someone, I swear to you, you come back a year later, they're going to have slightly different rules, because they're going to say something like, well, Hugh, what I noticed was when this happens, then I have to do this and that. So I've added this rule and I've, you know, modified it. And that's cool. I think that's good, because that's good for them. They shouldn't follow exactly what I tell them. They should use their own beliefs in building it. So, but I just don't believe this idea that if everyone, you know, if enough people have the rules, that it stops working, because I just don't think we're all doing the same thing, even if we all have the same rules, which is crazy to say. But
I agree. Yeah. And especially, you have to think about, like, the retail market is so small in most markets, you know, options, futures, whatever, that I don't think you could really move the market. I think the only way that you would really move a market, like you said, is with an automated system traded by some sort of bank or something, or some sort of hedge fund that has like huge volume, right? And I think that's the only way that a system could like play itself out, maybe.
Yes. Yeah, it's difficult to imagine a situation in our life, like where we are right now, where that's possible. Now, what people will sometimes do is they'll point to like the turtle rules and they go, see, it didn't work, you know, from 1998 to 2006. It stopped working. That's because Everyone read the market wizards. Everyone started trading the show rules, and I don't think that's really true. I think it's just a case of the system went through a terrible stretch, or whatever.
Long drawdowns, so you got to be able to.
Yeah.
Yeah.
Totally, man. And even if you talk to some of the turtles, they'll tell you that they're trading different rules now.
Mm-hmm.
They're still trend following, many of them, but they're not trading the same original rules. They've modified them, which is good. That's the whole point of, I think, of trading. So it's a tricky one because I understand, and this is, it's kind of like the idea of brokers out to get you. It's this idea of, systems stop working because everyone's, don't share it. Everyone's going to get it and then it'll ruin it. And the brokers are going to, ruin your account. And, there's a lot of these things that we get as traders that we hear about. So just part of the landscape, I guess.
Yeah. Cool. Great insights. All right. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I think it's harder to trade really gappy charts. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I got a question from a trader. He's been trading indices and shares for a long time, and he was saying that when he tried to move over to currencies, he found it difficult, and he was wondering, why is it that he finds it difficult moving over? And I had some ideas on that, but what were some of your thoughts?
I think it's just a different psychology, right? I think Forex and maybe futures kind of have a similar psychology, and then you got stocks, indices, and maybe even options that have a slightly different psychology behind them. And it seems like if you're a stock trader, you can find value going long. You're looking for those companies that are really undervalued, or they're going to have a new product coming out or something like that, and you can look at the fundamentals and really lean on that. And then for the penny stocks, if you find those scam companies and you know that they're no good but they take off, then you can just short them. That's a different psychology behind that compared to Forex or maybe even futures. What do you think?
No, I think probably the biggest thing is what you touched on is when you look at shares. Okay, so when I started trading in the 90s, we learned from this guy named William J. O'Neill, who wrote a book, How to Make Money Trading Stocks. I think it's something like that. We can put it in the show notes. And he came up with the Investor's Business Daily, which he thought was a more technical based newspaper rather than the Wall Street Journal, which was kind of the go-to thing in the States at the time. Other countries have different papers, but so he was talking about earnings per share, and relative strength, and things like that. And we would get the charts every week called daily graphs, and they were these phone books. Sometimes 5 of them would come every week, and we could pour through them and look at the charts and find out if there's any cup and handle, which is what William J. O'Neill talked about in his book, right?
Yeah.
Anyway, here's the thing. We were only looking for shares to buy. And this is also in the dot-com bubble too, from 94 to 99. So we were only looking to buy. There was a really hardcore rising market, especially towards the end of that, 97, 98. Mm-hmm. There was a lot going on then. And I remember, buying stocks like Netscape, Gateway 2000, which made computers, all these really AOL, all these really darling companies at the time. And when you think about it, a couple of things are interesting about that. We were only buying, right? Mm-hmm. So when you're a currency trader, automatically you have to look at things a little bit differently. I would even argue more than it's a little bit different to futures traders, because futures traders, I remember when oil fell earlier this year in 2020, earlier in 2020, I think it was. I don't think it was late 2019. It was early 2020. Oil fell really hard, and everyone was saying it was the death of oil. But the thing is, oil does have some intrinsic value. It can't go to 0 cents. You know what I mean? I suppose a company could. If a company is totally bankrupt and they're toast, then the shares will go really low. But before that, they'll actually delist it, and they'll take it off the major exchange and they'll move it to another. I remember I had a stock. I know this because I had a stock And I called my broker. There's no internet or anything. And I called my broker. I'm like, what? Like, where's the stock? I can't find the quote like in the paper.
Mhm.
And he's like, well, it's gone to I think he called it the note board, or it was something about the board, some sort of board. And I'm like, what's the note board or whatever? He goes, that's where stocks go to die. It's like, awesome. My stock's going to die. But yeah, so I guess the biggest thing is when you're trading Forex, you're always trading one relative to the other.
Mhm.
So you can look at the pound Aussie chart, or you can look at the Aussie pound chart. And there are actually some charts that you can find, we can post in the show notes, where you actually, it's the opposite. It's not the Euro USD, it's the USD Euro. It's really kind of hard to wrap your head around that. So inherently, currency pairs are range bound.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Now, it doesn't seem like that because we still can trade with leverage in Forex, even though they're trying to take that away from us. There still is a range, a high and a low for the euro, which the Euro USD, it's about from, it's been about 77 cents to the euro to about $1.61, I think, around there. So it's basically been caught in that range since the inception of the euro. And every currency pair kind of has that range. So it's a little bit different from, say, gold. Because some people right now, if you talk to them, they'll say gold is going to go to $10,000. Well, it hasn't really been to $10,000 in modern times. We don't have a chart that goes back that shows gold being worth that much. But it could, and it could go to 100,000 or 200,000. Same with Bitcoin and everything else. Whereas with currencies, it's a little. That could certainly happen, but that would mean that one of the currencies is basically in the toilet and is done, and they're going to have to reset that currency, right? So yeah, it does take a little bit of a different approach. You really have to. You almost have to consider twice as many decisions because you're thinking of buying or selling. Whereas a lot of times, there are a lot of share traders and index traders that just buy. I suppose index traders are a little bit different because they could buy and sell. And certainly futures traders can also sell. But they definitely have a buy bias that you don't necessarily have to have as a currency trader. The leverage thing too, if you haven't traded futures before, that can be a bit tricky to get your head around. And it was for me. Like I remember when I was first getting into, getting out of share trading and getting into this, I had to talk to a futures broker like on the phone, and he was like sending me stuff so that I could understand, what is this margin thing and all that. And we had actually, traded shares on margin. We were able to do that, but it wasn't to the level that you get in Forex or in futures. Obviously, it was and I have no idea what the margin requirements are now in shares, but we couldn't get that much, and you have to pay interest and all that,
I remember I had a small futures account once, and I only could take one trade at a time.
Yeah. And that's why some of the Ryan Jones method of fixed ratio trading, like that's where that comes from, because it's like the question was, how do we grow our account quickly when we can only trade, you know what I mean? Like you're kind of you're stuck with these fixed
One or
lot
two
sizes.
trades.
Yeah. So that's where all that stuff comes from, is from that sort of approach. It's really lucky, I think, and fortunate if you're a currency trader that you can get fine lot distinctions and you can get smaller lot sizes, because that makes a big difference over time. Of course, if you map it out, you can see that it makes a huge difference over time if you're able to get precisely 2% risk or precisely 1.5% risk or whatever your risk amount is. It's a bigger deal for sure, because future traders can't do that, obviously, especially with smaller accounts.
Yeah, totally. I think if you look at the mechanics of the different markets too, when you dig into it, like the stock market, like if you have a retirement account, you can only go long, right? Stuff like that. And then you have the pattern day trader rule, which really kind of limits people. And if you want to go short, then you have to be able to borrow the shares, which means you have to find it somewhere. And then same thing with like the futures markets, where it can get locked, limit up, limit down. So there's all kinds of different mechanics behind it. Whereas the futures market, the Forex market is pretty wide open. You can go long and short pretty easily both ways.
Yes, and outside of the States, you can trade CFDs, contracts for difference, which is like in the UK and Australia, we have these where it's like the major shares like, Tesla or Apple or whatever, you can trade like, it's actually the same as Forex really, where you're trading like a mirror of the market. So, in Forex, we're trading these charts that aren't, our broker passes the trade through to the real currency market, the real interbank currency market. And it's the same thing with these CFDs. So you can actually trade smaller lot sizes and stuff with like Tesla or Apple or, you know, the big shares that are traded like Microsoft and stuff like that. So yeah, so that's another thing that you can do if you move over to sort of like the Forex world. It takes a bit, I think, of mental flexibility once you go over to currency trading. I understand people say it's harder, but it depends on what you consider to be harder. Like, I think it's harder to trade really gappy charts.
Yeah.
That's really the main reason why I like currency. I really do. I mean, it used to be like probably like most people because you like to have charts going like after work or whatever, so you can trade, you know, when you get home or early in the morning before you go to work or something like that. The thing that I really hate is having a trade on and then the market gaps over, you know, your stop or your price or whatever, you know what I mean? Like that, all that stuff, to me, that is a lot of risk there. Now, I understand currencies definitely do gap as well. The technical analysis side of trading is so much easier when you have these really smooth charts, which you typically get, you know, these candles that you get in Forex. And that's what I really like about it, to be honest. Like, I've looked at Australian companies, Australian shares, and they're so gappy. And the market's only open here for like 4 hours or something. It's crazy. And so you get these massive gaps, and it just, you know what it looks like? It looks like target practice. It looks like someone just took a gun and just shot it like you're like, whoa. So it opened here today, and then tomorrow it opens up here. It's crazy, you know? Like, so I really like the smooth charts that you get in currencies. And that, to me, that's another thing that I think, you know, might be weird if you're coming over from shares and you're so used to that. Yeah, it just depends. With anything, though, a practice is what it's going to take. And, you know, working through a simulator, getting your feet wet, getting your confidence up, all the sort of fundamentals of trading, that's the way to go for sure.
Yeah, well, backtesting is really tough with shares too, right? You need so many data sets. It's kind of crazy.
Yeah, you need a lot of data. That's right. Yeah, that's right. Actually, one of the guys in the forum, he was showing me one that I didn't even hear about, but he uses this in his share trading, and it looks very similar to Forex Tester. But you're right. I mean, your data has to be really good no matter what if you want to get some good idea of how your strategies are going to work, for sure.
Yeah. All right, cool. Thanks, Walter.
Okay. See you.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I know of a couple ladies who can double or triple their account in like 2 or 3 months, but both of them said that I can only work with a $10,000 account.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So, hey, Hugh, I was talking to a trader in my forum, and she was talking about how she kind of gets into this rhythm where she does really, really well in her trading, and in her live account, she kills it basically. But then inevitably she has like this terrible drop off in performance. And she was wondering, like, if, you know, why does this happen? And I think she's onto the right thing, because obviously it could be many things, but two that come to mind would be just a, you know, reversion to the mean, right? So you've been doing really well, but if you have a 50% win rate and you have 8 winning trades in a row, maybe you are going to have a few losers, you know, 4 or 5 losers in a row. But actually, I think what's going on with her, and I think she's identified this, it's really coming down to confidence and overconfidence. So you know how they say, like with athletes, if they're on a win streak and they're just really hot, you know, and this team's getting really hot going into the playoffs, they're so hard to beat. It's kind of like that with trading. But the problem is, because so much of your success in trading comes down to how well you execute and how well you prepare yourself to execute, which is really what this podcast is about, isn't it? It's about that aspect of trading. I suggested to her that she really focus in on how well she is doing that. So, in other words, it's so tempting for us to blame the strategy or the markets when we are, in fact, the reason why we end up with these really difficult losing streaks. So what I told her is, this should be something that you can track. This should be a data point. You should have data points in your journal that are telling you how well are you taking your trades at the beginning, and how well you're managing them, and how well are you getting out of your trades, right? So if you have those data, then you can go back and look and say, okay, well, it looks like every time I start to get really good and have lots of, get really lucky and have a win streak, I started to get sloppy and I start to consider trades that I wouldn't normally consider. But because I'm feeling so invincible, I take these sort of subpar pattern setups or something like that. And so that's really, I think, one of the key things to look at. It could, of course, be normal reversion to the mean, but in some cases, and I think in her case, she was right to suggest this or to ask this, is, it could be performance related. So that means keeping a track, so screenshots of your entry, screenshots of your exit, and also keeping a track of what do you think about this entry trade? Like, how good does this look at inception, at the beginning of the trade? And then how good does it look at the end of the trade? Like, how well did you get out of that according to your rules? So it's all according to your rules. So that's one way that you can fight this, is you can also keep in your journal, like, how confident are you in your trading? So you kind of ask yourself this every day or every time you take a trade, like, how confident are you in your trading right now, on a scale of 1 to 10 or whatever, and you can track it over time. And what you can see is you can map that onto your equity curve and see if your confidence goes up and then your equity curve goes down. You know what I mean? Like that's sort of a precursor to drawdowns, which again would indicate that it's performance related and not anything to do with the markets or the strategy.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, that's true. Totally true. This could go either way. Like, you could use this as an excuse, or you could use it, or it could be a valid reason, right? But some people have this circuit breaker where they think they don't deserve success or whatever, and then they kind of just sabotage it. On one hand, some people blame that for their losses, but in reality, like you said, they're not tracking their stuff, so they don't know if that's the case or not. They're just trying to blame it on something. I think in some cases there are legitimately people who kind of say, "Oh no, I'm successful. What am I going to do?" Right, and then they kind of just sabotage it, maybe subconsciously. But I think that's another thing to look at.
Yeah, and it could be both, right? It could be exactly what you're saying, and then that sort of manifests in the in the execution. And so so there are some, you can go to a hypnotherapist and ask them to find out what you think about your trading. They can kind of probe and things like that. Or you can do what's called remote association. So you can write down, you could literally go to a thesaurus, an online thesaurus, and copy all the words that mean wealthy or successful, all those synonyms. You could copy all those, paste them down in a column, right? And then print that out. And then what you can do is you can just go, calm yourself down, get really relaxed, deep breathing and stuff. And then bring that sheet of paper out. And after you look at every word, write down the first thing that comes to your mind on the other side of it. So wealthy, you write down whatever comes to mind. Rich, you write that down. Successful, millionaire, all that stuff. You write down all of your thoughts, and then see if you see a pattern. If you're writing down all these really negative adjectives to those words, right, to those synonyms, that's telling you something about what's going on up here and why maybe you have this repeating pattern. I know traders where they pull out their money. Once they hit 100 grand, they pull it all out and they start over at 10 grand, just work it up and just keep doing that, because they self-sabotage when they're trading $500,000 accounts. So I'm not saying that you have to do that. That's a workaround. I think you're actually better off, working on the root of the problem, right?
Yeah.
But at least you know what's going on. There's actually a fascinating interview in the Market Wizards or the New Market Wizards. It's the last one, and it's with the hypnotherapist, and he talks about this client he had where he hypnotized him, and he found out that he kept taking his statements from his broker and he would hide them from his wife or whatever.
Oh yeah, I remember that one. Yeah.
Yeah, do you remember that? Like,
Yeah.
so that's an example of that, you know?
Yeah.
Maybe we can link up, I can link up that book, and it's the last chapter. I can't remember which book it is, but yeah, so those, you know, those are definitely some things that I think much more common than we recognize, for sure. Yeah.
It's really interesting. I know of a couple of ladies who can double or triple their account in like 2 or 3 months, but both of them said that I can only work with a $10,000 account. At the next month, I'm going to pull out everything that's the profit and then start all over again. My buddy actually got one of those ladies, like, I think it was $500,000 to trade or something. And then she couldn't do it. Like, she almost blew it out, and she came back, but then the investor pulled out. So it's like, it's a really interesting psychology.
And the dynamic between trader and investor is interesting too, because a lot of times the investor is not educated in terms of like what, like they don't know what the likelihood, like the likely drawdowns are and all that stuff. Like that's not, you know what I mean?
Yeah.
It's actually really hard to be a trader and have an investor who knows a little bit about trading. You know, that's a really difficult thing. So like people who get into that, I always say you need to have an agreement that says like the money is tied up for this amount of time.
Yeah.
But there's also like triggers. Like if the drawdown goes to this level, then all bets are off. You can pull your money. You know what I mean? Like safeguards on both sides. Yeah. So, it's a really tricky thing to do that. And in my experience, the traders or the investors who have the least amount of, like the lowest amount of money are the biggest headaches. You know what I mean? It's the guy that gives you $5,000 that you got to worry about, not not the guy that has 500 grand. It's so fun. It's so true. It is so
exactly.
True.
And I think a lot of these like prop firms, they kind of set a lot of traders up for failure because their drawdown is like 10%. Well, how much money are you going to make with the 10% drawdown, right? So it's really tough. And then they only give you like $5,000 to trade with. So I don't know. That's kind of a tough business too.
Yeah, absolutely. Yeah.
All right. Thanks, Walter.
Thanks. See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A lot of traders think that automated trading is the be all and end all, and it's your way out of psychological torture as a trader.
Yeah.
That's not true.
Yeah,
right?
exactly.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this is something that came up recently this week. It's around like mechanical backtesting or, automated strategies. What's kind of the psychology you go through when you test something that's automated? It can be difficult for the average trader to get an EA or some sort of a program, stick it in, they test 3 or 4 pairs and it doesn't work, right? So where would you take it from there?
Okay, so probably I would recommend that people who are into this, there's a couple of books. One is by Kevin Davey, and the other one, I don't think it's Stidham, but it's another guy. I'll put the links in the show notes. Mm-hmm. So here's the deal with that. Like, you really need to group your data into 2 sets. One set is the set that you're going to test on and make sure that your strategy works, right? Like, which is what you were just talking about. Mm-hmm. The other set, which is the out of set data that you're going to use to take that system that you've developed and see if it actually works, right? Mm-hmm. So in one sense, you're like let's say you have like some moving averages and Bollinger Bands and RSI, and so you're kind of optimizing the levels and the values and all that on one set of data. Now what you need to do is take that data, and the out of sample data is where you actually run the strategy to see if it works, right? Mm-hmm. So that's really important, because a lot of times what people will do is they will take, like, if they have 60 months of data, they will take like 55 months, develop the strategy, and then take 5 months and actually test it. You don't want to do that. You're actually better off in the reverse, having a little chunk of time or data to develop the strategy, and then more to actually see if it actually works. You know what I mean? Mm-hmm. And that's why I'm a real big believer in simple strategies that don't have a lot of degrees of freedom. So degrees of freedom just means the availability of different settings, different levels, right? Mm-hmm. So a moving average has tons of degrees of freedom, right? So yeah, so if in that case, what you said, which is if I had a strategy and I tested on it and it didn't work, you should probably throw it away, right?
Mhm.
That would be the thing to do. But in most cases, what people do is they'll go back and they'll say, well, what if I had done this? Okay, what's happening now is you're over optimizing that data set immediately. As soon as you did that, as soon as you said, okay, I'm going to use this indicator or this pattern or whatever it is on this set of data and it didn't work, that's like throw it away, and you should like start with something completely different. Because the more you go back on that set of data and try and make it work, the more what you're doing is fitting that strategy to work on that particular set of data. You know what I mean? That time period in the markets. And that will come out when you take that data and then you apply that system that you used, that you developed on that set of data, and then apply it on the out of sample data. So that's the real problem. So probably the biggest thing I think is understanding that the relationship between the data that you use to develop your strategy and the data that you use to test your strategy. The other thing is a lot of traders think that automated trading is the be all and end all, and it's your way out of psychological torture as a trader.
Yeah.
That's not true.
Yeah,
right?
exactly.
Yeah, that is not true. It is not true, because you still have to turn it on and you have to turn it off. You have to say, oh no, we're in a GFC or we're in a pandemic, so that means I shouldn't trade my strategy anymore, right? Or I should reduce my risk. And basically what you're doing is you're making up rules on the fly, okay? Because you didn't have any contingencies for that when you develop your strategy. So thinking that letting the computer make the choices for you is going to help you avoid, the psychological pitfalls of trading is, I think, wrong. And I don't think that's true at all. Unfortunately, a lot of us fall victim to that. Now, I will admit that I do like to use automation on the exits. I found this to be very freeing. If you're using like a trailing exit or something that you don't want to check every, for me, like I don't want to check every 6 hour or 8 hour candle or whatever. So I can do that, right? I can set a target and I can set my automated EA exit to get me out. So that's really cool, I think, to do that. There still is a temptation to fiddle with it and all that. But at the end of the day, using automation in your trading is really kind of a test of how developed or evolved you are as a trader, I think. The more confidence you have in your automation, whatever that is, whether it's an exit rule or the complete strategy, that's going to come from your testing, right? From your experience, from getting dirty with the data. And so, like, if you're a beginner and you're starting to get into trading, I think it's the worst thing you can do. I really do. I think you're better off just learning simple strategies and applying them manually. But I think later on, I think it kind of is like the way that a lot of traders end up looking. If you've been doing this for 10 years, you're certainly going to look for some shortcuts, right? You're going to look for how do I get myself away from the computer, sort of thing. So yeah, I can see those two things, the in-sample and out-of-sample testing, and the thought that it's going to remove all emotion from your trading. I think those are the two biggies for me. What about you?
That's true. Yeah, I mean, I've never been a big fully automated person either, but I can see where either automating the entry or the exit could be a good way to go and just kind of save yourself some time. My trading buddy likes to automate his entries so that the stop gets moved automatically, but he manages the exit, and so you automate the exit. So I can see it helping there. But I think like the idea of testing or having a fully automated system is not for everybody. I think the psychology behind that and the technical mindset behind that, I think, is really hard to get your head around.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And to be honest, like, I think people overcomplicate it, kind of on the degrees of freedom thing. Like, I'm serious. Like, I've seen some really good strategies, and you know what they are? They're things like, buy the pound at 3:00 every day. Like, it's like simple stuff like that. And you're like, what? That would never work, or buy when the market or sell when the market makes 3 candles in a row where it closes higher than the previous candle. You know what I mean? Like, it's kind of like a counter trend move or whatever. Like there's so many really, like, you look at the rules of the code and you're just like, no way, man, there's no way that's going to work. But it does. And so that's another thing to keep in mind. I think as beginners, we start like, and I was the same way. Dude, when I first, like, we had, my friend and I, my trading buddy, we had a spreadsheet with 15 different things, different indicator levels that we look at, and I would actually tick on the spreadsheet yes, no, yes, no. And if I had 12 of the 15 in the right direction, I would take the trade. That's what I did. And that was on the 3-minute charts. You know what would happen? By the time I went through all 15 things, the 3-minute candle would already print. You know what I mean? Like, it was crazy.
Yeah. I think we've all been down that route, though, right? With the checklist and everything.
Yeah, totally. Yeah, it was so funny. Yeah. That was pretty classic. Yeah.
Cool. Well, thanks for the insights.
All right. Thanks. See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I'm sure, people look back 1,000 years from now on us and they'll say, yeah, they didn't have that quite right.
They were using all these drugs and
yeah, exactly. There'll be something. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter. All right. This might be a little bit out there for a topic, but I'd be interested to hear what you think about the mind versus the brain. So is there like is everything coming from the physical brain, or do you think that there's some other knowledge out there that maybe we receive through the brain to make our decisions?
This is really good. Thanks. And I'm sure you have some interesting thoughts on this too. I'm sure of it.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So the way I look at science is it's really materialism. So if you talk to like scientists, in essence, most scientists, not all, but most scientists in a professional sense, they are in the field of materialism. And that's kind of the way that our science has gone down this path of, if you can touch it, if you can see it, if you can hold it, if you can measure it, then it's real. And everything else is not. Okay. Now that hasn't always been the case, but it certainly has been the case the last 150 years or so in our scientific fields, right? So if you talk to a lot of neuroscientists, many of them, not all of them, but many of them will tell you, just like how we map the gene, like the genome, like the human DNA, like when we map that out, it's like, okay, they thought, okay, we're gonna figure out all disease, because of course all disease is due to our genes, right? Which we found out it's not quite the case. Certainly is there's epigenetics, the interaction between your genes and the environment. A lot of hardcore neuroscientists will tell you that if they map out the brain completely, they're not there yet, they don't know exactly what every little nook and cranny of the brain does. They have a general idea of Broca's area, and this is where your emotions, and this is where your frontal lobes is where you do your planning and speech and listening, and like they have that, like that's all. But they don't know exactly down to the neuron sort of where things are, right? But like they do with DNA. And so some of them will tell you that as soon as we get to that point where we map out the entire brain, then we will know everything there is that you need to know about the brain, and you will know the mind. However, there are a lot of other scientists that believe that the mind is separate from the brain. I had whole classes in this in graduate school because I actually had some pretty cool professors who were kind of deep into this philosophical aspect of brain science, right? Cool. So it's really kind of cool. And so my belief is that the brain is like an antenna, okay? And so your mind is beyond the physical, kind of like a sailboat. So if you're in a sailboat, in fact, you might It's not a very good day today, but you might see some sailboats behind me. I'm not sure if you can. There's one. I don't know if you can see it, but anyway, these sailboats go by, and what they have is they have this big sail that catches the wind. Okay, and the wind helps them go. Obviously, they need to get that sail just right to catch the wind. Well, it's the same thing with our brain, right? Our brain is like a sail, right? In essence, what we're doing, our mind is beyond our brain, as I see it. It's beyond us. It's beyond the physical. So the essence of who you are comes from all those experiences that have come in through your brain and all those physical, all that physical stuff, all those interactions, your memories, the things you've forgotten, all that stuff kind of helps form that, but it's a bit beyond. So you can that's why, for example, and I don't know, this is probably going to freak some people out, but there's a book written in 2004, and I will put it in the show notes. Her name is Sylvia Browne. I don't know if you heard of Sylvia Browne. You heard of her?
Yeah, I've heard of her.
She's a psychic, right? Yeah, she's a psychic. I always thought she was a total and complete fraud. Okay?
Yeah.
Maybe she still is. But what if I told you that she wrote back in 2004 about this virus that would come in the year 2020?
Mm-hmm.
And she basically made all these predictions in this book. And she was talking about this virus, and she pretty much nailed it. Okay.
Mm-hmm.
So, and it's just like people who use like remote viewing and things like that, where they pick up on other areas of the planet where they're not physically located. How is that possible, right?
Mm-hmm.
So I believe that our brains can serve as a bit of an antenna. And I think of the mind as that aspect of, or that ability of you as a human to tap into other things other than what's in the physical stored in your neurons, right? So what are your thoughts? Because I know you probably have some really good ideas along these lines.
Yeah, no, I totally agree. I've been researching it quite a bit, and I've been looking for this book. The name is escaping me, but the guy basically, he's done a lot of studies, and he's proven that there is like a certain knowledge that sits outside of the body, and if you get into this alpha state, you can actually access that knowledge. I don't remember what it was, but I'll put it in the notes when I remember. And yeah,
is it a new book? Is that a new one or an older one?
No, it's older. It's older. I forget the name. Jeez. Anyway, but yeah, I've read several books like that, and then there's that other one, The Secret Life of Plants, right? And it shows that plants actually have they can tell when they're going to be harmed. So when you think about only eating plants versus animals, there's kind of no real difference, right? And once you have that sort of knowledge of what's out there, then you can I think it makes it easier to understand, okay, there are some other things out there that we don't typically learn about or know about, and can be accessed, from outside of us. And it's not just the brain that creates these ideas or these thoughts. And if you go through a lot of famous people, like composers and artists and all these kind of stuff, a lot of them say that I was just the conduit. I did not think of this. Somehow it just came through me, and I just moved my hand, and I wrote this book, or I painted this painting, or I created this opera, or whatever it was. So yeah, I believe that there is a certain amount of information out there. And like you said, I think, our brain is just kind of this antenna. It stores a little bit of information about our life right now, and it helps us like brush our teeth and stuff. But other than that, I think, there is the potential to get access to this other knowledge.
Yeah, so Carl Jung talked about that. I don't know a lot about Carl Jung. I wasn't really big into him, but some people were. He was a student of Freud. So he talked about like the collective consciousness.
Yeah.
So everyone sort of has this collective, like, deep in your unconscious, like the shared experience. And actually, my understanding is that there's data that comes from the mother. Like, so let's say your mother really loved Doritos, okay? Or had some trauma at a young age, like a really terrible experience when she was 5, that actually gets passed on to her children, like encoded somehow. Like that like all that stuff is really weird. That's only kind of recent stuff that we found. And so, yeah, there's a lot more to it. And whenever someone says, like, when you start saying stuff like this, Hugh, and people say like, oh, well, that's ridiculous, or that's not real, or whatever, I always just come back with, well, bloodletting. We used to think that bloodletting was the thing to do. You know what I mean? Like
leeches.
Exactly. Like, it's so easy to think that where we are, we're at the tip of the spear. We're at the we're at the point of science where we have everything, or we almost have all the knowledge and everything. But you always look back in historic time, look back years and years and go, oh, they had bloodletting, they're a bit off there, and I'm sure, people look back 1,000 years from now on us and they'll say, yeah, they didn't have that quite right.
They were using all these drugs and
yeah, exactly. There'll be something. There'll be some clear direction that we sort of went down, and it was the wrong path. It was a dead end.
Yeah. Well, there's a lot of evidence that they're coming up with, like in Turkey and stuff, where they're unearthing these ancient civilizations, right? And they had plumbing and they had supposedly electricity and all this stuff. So that just shows you that we might not be the tip of the top of the mountain, or whatever you want to call it, right?
Yeah.
We're not the highest point of civilization. So
yeah,
something to
Göbekli
consider.
Tepe. Yeah, exactly. Göbekli Tepe is a great example of that, because that shouldn't exist back in the Iron Age. Like, they have all that stuff. We weren't supposed to have that in the Iron Age. Nope. I don't know if did you hear about that thing they found in Utah? Like, what the? I mean, that's just weird.
Which one was that?
Just the other day, they found a monolith in Utah. So in the middle of nowhere. Okay, these guys were like, I don't know if they were like rangers or foresters or whatever, like they're geologists or something, but they were kind of with the state, trooper dudes or whatever, some official capacity. They're in this helicopter, and one of the dudes is like, "What's that?" Because they're in this super remote area. Actually, a friend of mine used to work out with the Parks Service in Utah, and he was like, he loved it out by Moab and stuff. I don't know exactly where it was. You can look it up. I'll put it in the show notes for people. But they found this massive metal monolith, like a 12-foot tall monolith stuck into the rock, just sitting there in the middle of nowhere. And they're like, dude, like what? Like what? And so the only theory right now that they're putting forward is that it's some sort of elaborate art installation. Okay, maybe. But that, like, who would helicopter that in? And there's like no seams or anything. Like, like where I live, if they put a bike rack into like the concrete, into like the footpath, the sidewalk, if they put a bike rack in there, there's always like where they had to like drill the hole, and they had to kind of like spackle the concrete around there and kind of like seal it up. But this is like, it looks like it just got pushed up out of the ground. It's this pristine metal, shiny. That's how I think how the guy saw it. He was up in the helicopter, and he's like, whoa, what's that down there? It's just an example of what you're saying. Like, there's these, we don't know everything. Like, I don't know where that came from, and maybe it was some elaborate art installation that they somehow hiked into the middle of nowhere and somehow installed like perfectly. It looks like it's cut with lasers or whatever. Like, maybe.
Yeah, maybe.
But it could also be something like historical, or something just like, there is no real logical explanation for it, and things like that come up all the time. So yeah, I'm totally with you on that one.
Yeah, I mean, they haven't really totally explained the pyramids yet.
Exactly.
It's been like hundreds of years, so like
yeah. No one can do that. No one can do what they did back then. Like, we can't do it today with cranes and all that stuff.
Yeah, true. All right, cool. Thanks, Walter.
Yeah.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
Make a decision. I think the worst thing you can do is kind of just like say, I'm going to take this trade. Am I going to get out? Am I not?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
All right, Walter, this is something that you probably know about from your studies in psychology. This idea of paradox of indecision. I think they call it like Birdie's ass or something like that, right? Where the donkey is between the food and the water, and he can't make a decision, and then he dies because he doesn't get either one. How do you see that playing out in trading? Like, how do you see that manifest?
Well, I think in trading, our gut instinct is to take the profit and to not wait for. So, like, let's say you're in a trade and your trade's in profit, but it hasn't gone as far as you had hoped it would go. Let's say, for example, you risk $1,000 and you want it to go to your $2,000 target. You want to make $2,000 on your $1,000 risk. It's really tempting when it's at $800 for you to go, maybe I should just. It's almost Friday. Maybe I should just take that profit, And the problem with that is that it messes up all of your stats. So I think when people are stuck and they're indecisive, the instinct for traders, for us, is to do the wrong thing.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
It's usually to take the profit. It's usually to, put off the pain. So take the profit quickly, or take the nice feeling thing quickly, and to put off the thing like the losing trade, move the stop away, move it further so I don't get stopped out yet, give it more room. Like those sorts of things, I think in traders, when really it's interesting that some of the most successful traders, what they've done instead is they learn to adapt and interpret the market information and feedback that they get differently to most traders. So, for example, trading with really low win rates strategies, or not taking a lot of trades and having a lot of restraint. You know what I mean? So it is really easy to get stuck in that situation where you're like, I don't know what to do. But I think the tendency for most of us, at least for me and a lot of traders I've talked to, especially when you first start trading, is to do the wrong thing. So to take that quick profit, to put off that painful loss, all those sorts of things are kind of like what we're built to do. And it's why the markets, it's classic. Like I was just reading the other day about this hedge fund, and this hedge fund had been bearish for years. Okay. They had been banking on a market collapse. And interesting thing about it was this year, they had finally decided, you know what? No, we're going to go long. We're going to go long the markets. We're not short anymore. And then March 2020 happened, and with the coronavirus freak out, and of course the markets all went down. And so they literally decided to flip right at the point. You know what I mean? Everything turned around. It's so amazing how we are so good at that as people, at picking the exact turning point and deciding, you know what? Maybe I'm doing the wrong thing here. Maybe I should do this instead. And it's always, right around the point where you should actually not do that. And I think that kind of that's the story of the markets. That's why it's so difficult for a lot of people to make this work, is because you're just built to go against it, including, that being indecisive or deciding to do sort of the wrong thing mathematically. Financial, what are they called? Behavioral economics. Like they say that we should be very rational and make the rational decision and the one that makes the most money and all that, but we don't do that. The data is pretty clear on that. I believe that we don't do that we don't make those decisions that are most rational. And so instead we have these driving things, like the drive to be right, the drive to be right is to take profit quickly, the drive to avoid losses and say that you're incorrect. Both of those are kind of the same thing. It's like you don't want to take the loss, and you also don't want to say that, I made the wrong decision here, all that stuff. So it's a tricky thing. What are your thoughts?
Yeah, for sure. People, I think also it's worth mentioning that you should make a decision. I think the worst thing you can do is kind of just say, I'm going to take this trade. Am I going to get out? Am I going to not? And make a decision. Whatever you think is the right thing, just make the decision. And then number 2, record it. If you can do those 2 things, I think you'll learn much faster, because you'll understand, okay, I have a tendency to do this, take profits early, whatever it is. And then I record that in my journal, and I can see that doesn't result in much. But I think a lot of times people get stuck with a decision, and they're like, oh, maybe I should do that, maybe I shouldn't. And then they kind of flip a coin, and you're not really sticking to one path. If you can stick to one path, I think you can understand your logic and how you really feel about the trade. And then that will allow you to either continue on that path if it's working, or take another path if it's not, or whatever.
Yeah, that's a really good point. I learned that lesson. I was reading about a famous surfer, and he was saying how, as the waves get bigger, I don't really surf huge waves or anything, but when I was younger, I did more, I guess. And he was saying that the worst thing you can do in big surf is to be indecisive. You really and it's so true. Yeah, because it's exactly what you're saying. Yeah. Yeah, it's so bad because when you're paddling out, you've got to decide, are you going to try and get duck dive under the wave, or are you going to ditch your board? And when you're paddling forward wave, you got to decide, am I on this? Am I definitely going to try and catch this wave? Because what happens sometimes is people get a little bit fearful or whatever, and they pull back, and then they're stuck in the wave, and then they really take a pounding.
Catch
all that stuff.
Yeah.
Yeah, exactly. So it's the same with trading, and your point about having a record is really good, because then you can learn. You know what I mean? You can learn obviously from experience, but it's so much better because we kind of trick ourselves, and we cloud our memories by thinking that we're better than we are, or sometimes worse than we are. But I think for most of us, we think we're better than we are, and so having a record is really clear, because that clarity and keeps you sort of grounded at where you're really at. So that's key. Yeah, for sure.
Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Break the goals down into more achievable, aspects. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
So I was talking to a trader the other day, or messaging a trader the other day. Well, what he wanted to do was get really aggressive with his trading strategy and use some aggressive risk algorithms. And so we were working through the numbers, and he was trying to figure out, he kept coming back to this point, oh, my system's not good enough. Oh, my system's not good enough. And what I was trying to share with him is that actually your system's pretty good. But what's happening is when we tweak the risk so much and get really hyper aggressive, it's leading to likely drawdowns that are going to freak you out. You know what I mean? I think we confuse as traders this idea of the system's no good when really we put that label on it, when really it's more that the way we're trading this system is making it no good for our appetite for drawdowns. You know what I mean?
Yeah.
Do you know what I'm saying?
Yeah.
Does that make sense? Have you ever had that? I've had that happen lots of times.
Oh, yeah, for sure. I mean, I think there's also this idea that if you get a result at a certain risk amount, like maybe 0.5% risk, same results are going to scale up if you risk 5%. And it just doesn't work like that. I mean, your drawdowns are going to be more. And like you said, obviously the psychology is going to be different. And sometimes systems just blow up when you increase the risk that much. And I think that's what people need to understand, in addition to, tailoring the drawdown to their personality, right?
Yeah, it's exactly, you know what you reminded me of when you said that? It's exactly like saying, well, if I got from here to Las Vegas in 10 hours at 100 miles an hour, I'll just go 200 miles an hour and I'll get there in 5 hours. You're going to die, right? You're going to die on that 45 mile an hour turn. It's over. So yeah, it's exact same thing. It's exactly what you said. That's totally it. That's trading, thinking that everything is completely scalable. And now actually, I learned that lesson really early in terms of strategies, because one of the guys that was sort of getting me into trading and stuff, and he wanted to work with me and my friend in trading and sort of start bring in investors and stuff. And he was like, is it scalable? That was his main thing. He worked for a broker, so he understood this idea of, is it scalable? Is it scalable? And he kept pounding on this. And I was like, man, what is this guy talking about? But I realized what it was, because some strategies, they really only work at a certain size. You know what I mean? For example, if you're scalping the euro or whatever for 5 pips, you're actually going to move the market. I mean, you're going to move the Forex market if you have too much size there. You know what I mean?
Yeah.
You actually won't be able to get into all your position. I know people think about this more in terms of stocks and trading shares and that sort of thing. But it's actually, and I saw a really good presentation on this from the guy who founded Awanda. His name was Richard, and he was Richard Olson, and he was I don't think he has anything to do with Awanda anymore, but he sold out his part of it. But he was showing all this data. He had tick data going back to the 80s or something. The biggest takeaway I got from it was, wow, it doesn't take actually that much to move the Forex market. We think of it as this big, massive, and he's like, no, he's like, so if you're trading 10 lots or something, 10 standard lots or whatever, that's enough to actually really push it, And I found that fascinating, that whole idea. Yeah, so this idea of scalable, and it just, maps on perfectly. Obviously, that's not the case. And we often confuse whether or not it's the system that we don't like or the risk parameters that we've placed on the strategy, on the system. And that leads to drawdowns that we can no longer withstand. I mean, that's the one thing I try and get across to people, is that psychologically, your biggest issue is going to be dealing with the drawdowns. So you may as well upfront go, all right, what is the drawdown I'm willing to withstand, and what is the drawdown I'm willing to draw the line and say, I'm done. And so now you need to do everything possible to avoid that drawdown where you say, oh, I'm done. I can't do this. I can't sit through a 35% drawdown. That's impossible for me to do. I know that, so I'm not going to do it. So you need to know where that is before you ever start trading the strategy. That's the key thing. Yeah.
Yeah, sure. Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
And I think one thing that people think of also is that I need to increase my risk, or I need to increase the return because I can't make a living on whatever it is, 1% on $10,000, which is all they have in the account to trade, right? You know, the reality is that maybe you just get an investor and you get more money or whatever it is, but you can always somewhat scale that up. But I think thinking that you only are limited to what's in your account and the return on your system is kind of like, you know, you're kind of throwing away a good system when it could be useful.
Yeah, absolutely. Yeah. And you know, that idea, that 1% that you said, that the first traders that I came across, there was this group in London, and my friend introduced me to them, and they were, you know what their goal was every week? They had a very, very simple goal. Every week they just wanted to make 0.75%. That's it. That's all. And some weeks they'd lose 0.5% or whatever, or 1%. But they wanted to average every week 0.75%. That was it. That was their goal. It was just boom, boom, boom. And you know, you would be amazed at how quickly your account grows if you can do that. Even if you can only do 0.5% a week, if you just keep that money in there, and if you're able to compound it and you don't have to pull it out, you'd be amazed at how that can grow. It's not. It doesn't take that long actually. So it's going to grow faster there than in the bank. That's for sure. So yeah. Yeah, so you know that's the thing, is that sometimes you do have to take a step back and go, okay, well, I'm not going to be super aggressive, so what can I do? And maybe that's what you can do, is just take it, you know, break the goals down into more achievable, you know, aspects and more achievable steps. Yeah.
Yeah, cool. Good advice. All right, thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
But I'm not sure that going to school and getting a PhD or whatever, like I did, is really the best thing. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, we've both met quite a few people over the years and quite a few successful people. What are like the core traits that you see in successful people and successful traders?
Yeah, that's a good question. It's interesting because I think, you know, the test where it's like I'm an INTJ or EFP.
Oh, yeah.
Whatever, yeah.
Myers-Briggs.
Myers-Briggs, yeah. Myers-Briggs. I always get that one confused with the, there's another one. But anyway, yeah, with the Myers-Briggs, like I've seen on forums and stuff, people discuss like, oh, you know, if you're an INTJ, you know, that's the best trader profile or whatever. And I can see why people go down that way. But actually, I think there's only a few things that would make it easier. So there's a really good study of like really good gamblers, as funny as this sounds. And, you know, they actually look, the way that the author described it is, you know, they almost look at as if they're in, like, they live forever. So when they're looking at the odds, you know, they might have a slight odd in a certain situation. For example, like I can't even, like, I don't even know enough about poker or blackjack or whatever, but like in a certain situation with a certain hand in poker or blackjack, you know, your odds shift, all right? Or if certain number of face cards have been pulled out of a blackjack deck, even if it's 6 blackjack decks that are all mixed up together that they're playing, you know, the dealer's playing. Like there's times when it shifts and you get a slight advantage, right? And it's almost like in the study, they almost seem like they just live forever. And so they look at things on a really long time frame. And I think that's one thing I would say that's interesting about the successful traders. They have that ability to kind of see the value of a really slight edge. Whereas I think when we first start trading, we assume that we can't even start trading until we have like this enormous edge, right?
Yeah.
And once we find that, then it's like, it's over. We're just going to mine that sucker. And so I find that fascinating about the gamblers. I think that a lot of that translates to trading. The other big one would be resilience. I think that most traders quit and move on to something else, or just find trading too painful when they're unable to overcome losing streaks. I think that's a big one. I think that's probably the number one reason why most traders don't make it. Not because they don't have a good system, not because they don't have good risk rules in place, but because they were unable to trade through that drawdown. And so they've come up with excuses, whatever they are. The system's broken, the markets have changed, I'm not cut out for this. This is the wrong strategy for negative interest rate environments, whatever. They can come up with lots of reasons why, and they quit. So resilience, I think, is good, and also the ability to see the like to play out the odds in your head. And you can do that obviously with a spreadsheet. You can do that with Forex Tester. All of that's really important. But I think for me, if you're able to see the value, and it's really, I guess it's kind of in a way probabilistic thinking would be kind of the overarching general thing. Like, I really think it's important, and I was thinking about this the other day, not to go too far on a tangent. I know I want to get your ideas too on this, but I was thinking about kids and what's important for kids to learn. And, and I went to school for a long time, right? But I'm not sure that going to school and getting a PhD or whatever like I did is really the best thing for you. In a lot of ways, it kind of pins you in intellectually into a certain corner, and you almost can't get out of that.
Yeah.
And so I was thinking, like, what were the really good skills that people need to have? And I thought one would be the ability to understand probabilities and statistical thinking. The whole game of science is a game, and it's run on probabilities, basically. Everything. It doesn't matter if it's geology, astronomy, medicine, psychology, it's all a game of science. And so if you can understand probabilities and statistics, you can read all those papers, you can see what everyone's arguing, you can do all that, right? The other thing would be storytelling, because there's a lot of value in that. I'll tell you a quick story. One of my friends, his whole business is getting investors to invest in a fund of Australian properties, right? And he was saying that he had this guy come over from Switzerland, this billionaire guy, and they were trying to get him to invest in his company or whatever. And he's like, all the guy said to me was, tell me the story. My friend was like, I couldn't do it. I didn't know what to say. We had all the numbers and everything, but we didn't have the story. And I think there's a lot to that. Like, I remember in high school sitting on a bus going out to the ski fields. It was like, 3-4 hour trip. One of the guys, he was a year older than me in high school. He was sitting in the bus and he was sitting there telling me stories, and everyone was just riveted. And I remember thinking, that's awesome. Like, that this guy can do that. It's such a cool skill, to be able to tell stories in a way that's engaging and can teach lessons and stuff. So I really think, there's a few other things, like maybe learning how to speak in front of others, but there's certain skills that you can get, and you don't necessarily have to get a master's or a PhD to have those skills. You can learn probabilistic thinking, you can learn storytelling, all those things. You can learn how to speak in public, like, in an engaging, interesting way. And it's fascinating to me how many really good scientists are terrible speakers, and you see that.
Yeah.
Like, it's weird to me. Like, you would think if you spend your whole life on this one issue, like this one thing about, whatever it is, anti-aging, or, something about the number of Earth-like planets, in the universe or whatever. Like, if you had some really important thing, you thought this is the most important thing we need to understand, the ozone layer or whatever, you would think that you would spend a little bit of time learning how to explain that to other people. You know what I mean?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
So yeah, so I know it's a long-winded tangent, but for trading specifically, I think it's probabilistic thinking and being resilient, which is the ability to bounce back in the face of really tough times, because that's what traders have to deal with in terms of losing streaks. What are your thoughts?
Yeah, I would totally agree with you on the resilience part. I think it's a lot of these successful business people just stuck with it. And if you just stick with it at some point, if you try to improve, you'll get better, right? And I think that's a huge one, obviously. Also, I think a lot of good business people and traders, I think, are kind of weird, like in terms of what the average person thinks about them, right? It's the idea of having independent thought, thinking for themselves and trying to figure out what really works for me, what really does work in the markets, and not, like you said, falling into the trap of education, like the guy who can quote all the books, but he can't trade to save his life, right? And I think that's a really key one, to be able to think for yourself and to be able to really think way, way, way out of the norm. I think really puts you ahead of most people.
Yeah, and that's such a good point. I've noticed that, like, the difference between people generally speaking in the US versus in Australia is, in Australia we have kind of this really traditional English way of teaching children, not universally, but in a lot of places. And so what that means is, they get grounded in the classics and sort of thing. So they can quote the classics and they can understand certain things that are held high in our Western culture and ideas and authors and stuff like that. In the States, it's exactly what you say. Like, I think there's a lot of value placed on the cowboy, or the Lone Ranger, that sort of idea, the guy who's just out on his own, kind of doing his own thing and, figuring it out on his own, and being an individual is so important. Whereas in Australia, there are a lot of great things, but one of the things I've noticed is that it values being in a group, like the community. It's a very Asian idea of like the good of the community, Yeah. And that's really important. And one time I remember my friend who was Australian, he was trying to console me because what had happened in California is I had a failed business. And for lots of reasons. But he was saying, oh man, I'd always bet on, which basically what you were just saying. He said, I would always bet on the businessman with the failed business because he'll come good. He understands it. He's been through the wars. And I was thinking to myself, like, dude, I don't even need you to tell me this. Like, you know what I mean? Like, that wasn't even a concern for me. You know what I mean? Like, it really wasn't. Like, I was like, bummer. You know what I mean? It was a couple of years of my life, or whatever, year and a half or whatever, and a lot of money and work and this and that. But it didn't work out, and I wasn't like worried that I could never do anything because I had a failed business. You know what I mean? So, but his point was exactly what yours was, which is you have two people. You have one that's never seen failure and one that's seen failure. Which one do you bet on? He's like, I would always go with the guy that's been hardened through the trials of burning through a doomed business or whatever, as a business person, he was saying like that. And I was like, I could appreciate what he was saying, but I didn't need the pep talk. Yeah.
Cool. Yeah, totally. But that brings up the point also, like, if somebody thinks that they don't have these characteristics, how can they develop them? And do you think that some people are just destined not to have them?
I think that's in my opinion, and from what I've seen, even in psychology research, they used to kind of think that way, that like, and I've heard older people say this, when your kid's personality is formed before they turn 5 and all that, we found that personality is actually quite malleable. And I've noticed that I've changed in different environments. Like when I was in a certain circle of friends in undergraduate school, I was a certain way. And then when I went to graduate school, I kind of became a different person, had a different group of friends, and the same thing when I left US and came to Australia, I've kind of a different person that, and everyone will say, well, yeah, I'm always different with my grandma than I am with my friends from high school. Okay. Yeah, sure. Right. That's fine. But I'm talking about actually sort of changing your introversion, extroversion, like where you're on the scale. Type thing, right? Yeah. And so let's take an example of resilience. We've both identified resilience as being an important thing. So an easy way for that, and there's actually a school in Australia that teaches this way, and a lot of psychologists will as well. So like if you go to like a cognitive behavioral therapist because you're depressed or something, they will teach you this skill. But in terms of trading, let's say that I'm in a losing streak and I'm thinking, oh no, here we go again, another failed strategy. I'm training this strategy, it's failing me, it's not going to do very well, I need to give up, I need to find something better, I need to reassess. And I'm going to lose all my money. I'm never going to be able to make trading work. I'm never going to be able to quit my job. Like all these things sort of cascade. So what you do is you can build up resilience by rephrasing that self-talk, right? The way that you see things. And so you identify that that's called catastrophizing. Just because I have a losing streak of 6 trades means I'm never going to make it as a trader, right? That's catastrophizing. And it sounds ridiculous when you and I talk about it right now. But actually, for a lot of people, that's their reality. Yeah. And so, and I've been there. You've probably been there where you've had situations. It doesn't have to be trading, it could be anything. Where you start thinking, oh my God, like it's never going to work. So that can be retrained, and you can train yourself to say, okay, hang on. All right, so I've been trading this system for how long? 2 months. Okay, 2 months. And I back tested it for how long? 10 years. 10 years. Okay, 10 years. In the 10-year back test, did I ever see a drawdown of 6 trades in a row that were losers? Oh, yeah. Okay. So is it really the case that the strategy is busted? No, probably not. Mm-hmm. Is it likely this is a normal drawdown? Yeah, probably. So what you're just trying to do is just trying to inch yourself up a little bit higher to a slightly more positive emotion through logic. And that's all that is. And they do that with depressed people too, with cognitive behavioral therapy. You can look up CBT on the internet and see that. But that's what you can do to build resilience, is you can just learn new tools where you kind of step back and say, is this real what I'm seeing here? Or am I just catastrophizing? Am I just letting my thoughts get really negative and keep going to the point where, you know, I'm just like off the map. Like I'm not even on reality anymore. I'm just in this other world of manufactured pain and suffering, right? So, and it's so easy for us to do that because our ancestors did that. They're the ones that survived. They're the ones that were worried. Wait, what's that noise in the bushes? Oh no, it must be a lemur, you know, or whatever, right? They're the ones that survived. The guys that were just whistling through the woods, they're the ones that were eaten by the lemur, right? So I don't even know if lemurs eat people, but you know what I mean. Yeah. So, yeah.
Oh, great points. Yeah, for sure. I think another thing too that I found is that motivation really plays a big part in it. Like if you have the proper motivation, you can do almost anything. But if not motivated, you know, you have a nice cushy job, you kind of like it, then you probably won't quit because, you know, trading is tough in the beginning. So I think that's also another thing to consider is how can you maybe not artificially create motivation, but dig up your real motivation behind what you want to do. You know, do you want to travel around, be a trader? Do you want to buy these things that you can't afford right now? Do you want to take care of your kids and see them grow up, stuff like that? And I think that's also a big motivator to, you know, improve whatever you need to improve, no matter how hard it is.
Yeah, that's so true, because you will see that in traders, the ones who, like, no matter what, they still push through, and it helps build resilience when you have that end goal, and there's nothing else you're going to do except achieve that goal.
Yeah.
So yeah, it's a really good point. Yeah.
Cool. All right. Thanks, Walter.
See ya.
Yeah.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
I think it's just a matter of repetition.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here. Trader has written and said, you know, I really would like to get to the point where I'm making consistent profits, and yet I'm very fearful of taking a trade. So that's the question. So my thoughts on this, and I'd like to get your thoughts as well, is that when you're at a point of fear, what is fear? It's just anticipating the unknown. Because you don't know what may happen, you are concerned and you might think the worst. Well, what could be the worst possible outcome of a trade? It could be that you lose, or that you lose more than you had anticipated, right? So, you know, I said I'm gonna put my stop loss at $250, but I actually lose, you know, $375 or something like that. So that could be kind of the worst case scenario. The antidote for fear is preparation. And so that means running through your simulator like Forex Tester, doing your back tests, making sure that you know what is likely, what is not likely, looking at all that stuff and mapping it out. Because once you map it out, guess what? It's totally easy. Now you know, right? There's no really unknown. Once you get enough trades under your belt with a strategy, it's really shouldn't be unknown. It should be, well, I have a 61% chance of making profit here, 39% chance of getting stopped out, and around 0.5% of the time, the market may gap over my stop loss, and I'll lose a little bit more than I had anticipated in terms of my risk, right? So that, those are the sorts of situations that, preparation can help you with that. So if I hear from a trader that they're fearful, it probably means that they're not prepared and they don't really know what to expect. So you can help that with back testing. It also probably means that in the past you've had a lot of losing. And why is that? Is that because you're risking too much on your trades? So even a normal loss is really painful. Then you need to look at how what your position sizing is. And if you're just fearful in general of taking a trade, no matter the size, it just means you're not prepared yet. You need to go back. You need to, work through Forex Tester, find out what your numbers are in terms of average win, average loss, win rate, loss rate. You need to figure all that stuff out, what your likelihood of certain drawdowns are. All that stuff can be found just by preparing. So that would be my suggestion to the trader who has the fear of pulling the trigger. It could be that you have done all that and you have a low win rate. Sometimes that'll happen. You've worked it all out, but you have a 29% win rate system. In those cases, I've seen some traders successfully automate that so that the entry is automated so that they don't have to keep hitting the button knowing that, they got a 7 out of 10 chance of losing again, because that can be really that can be a difficult thing to do. So those are the things that I would say about that. What are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, cool. I think what you just said would cover about 95% of the fear of losing. But I think there's a small population of traders who also have this fear of just, the system isn't going to translate into the live market somehow. And I think those are the very, very risk averse people in life and in trading. So I think to overcome that, another thing to do is just to take some trades, like bring the risk way down and just take trades. And I think that's kind of like ripping off the Band-Aid, right? You just got to go out and do it. Otherwise, you're just in your head saying, oh, is this really going to work? Is this really going to work? And the only way to do it is to actually go and take a trade.
Yeah, and you can do that like over and over again with a small account, right?
Yeah,
so you have your $150 account or whatever. Yeah, just boom, 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 boom. Yeah, that's a great, because then you kind of get, it's like a muscle, you're exercising that muscle. You're taking the trades every day or whatever. And, yeah, sure, you're only risking 25 cents or whatever, but you're doing it. Like you're saying, like you're doing it. And it's totally different when it's real money. All of that is absolutely true. So, yeah.
Yeah, it's kind of like maybe hunting or skeet shooting, right? Like it might be a little intimidating to shoot a shotgun. But then once you do it a few times and you're like, okay, I can shoot these clay pigeons or whatever. And I think it's just a matter of repetition.
Yeah. Have you ever done that, by the way?
Yeah.
It hurts. Like
yeah,
I did it when I was a kid. Yeah. It hurts when you have the shotgun here. Like it's like I was just a kid. I don't even know. Maybe I was like 10 years old or something. And I went out.
Yeah.
And it like the kick is crazy.
Yeah. But once you can get over it, right? I think you get used to it or whatever. So
yeah. No, man. I only did it once, and I was like I said, I was a kid, and I was like, whoa. Like I wasn't expecting that. I mean, I knew it would be loud, but it was the kick and the thing that where it gets you right here in the chest, the shoulder. It's like, ugh. Yeah, it's crazy. Yeah. It's kind of fun though. Like it is kind of fun actually to shoot clay pigeons.
Yeah.
But
like, I'm not into violence, obviously, but it is fun.
Yeah, it is pretty fun. Yeah.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
charts are good and we like charts. We both like charts, and most people trade with that. But what are some other catalysts that you could look at maybe?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from one of our traders, and he is wondering about how should he go about trading and getting to the point where he knows which catalyst he should be using to trade. So he wants to find the right catalyst. And so my thoughts are that inside of this question, if we sort of unpack it, he's basically saying that he needs to know what the right pattern or the right catalyst. So the way I talk about it in Naked Forks is a catalyst is a pattern at a certain support and resistance level. Obviously, you could use trend lines, you could use other things. You don't have to use support and resistance levels, but a lot of traders do, and that's why they kind of become obvious on the charts. So what's interesting is he's kind of suggesting that he needs to find the right catalyst for him, but he doesn't actually come out and say that. He actually says, I need to find the right catalyst. So, because he doesn't say that all catalysts are making money, which one should I use, or which one makes the most money. He just says, I need to find the right one. So really what this comes down to, I think, is discovering what you as a person, like what you think as a trader about the markets. What do you think they're going to do? What do you think they will do? What do you think they're likely to do? That's all up to you, right? That's your, double bottoms and double tops make a lot of sense to some people because they like to find that sort of reversal point. And then trend continuation patterns make sense to other people. So, or breakouts make sense to other people. So it really depends on what you look for as a trader. Does that make sense? So what are your thoughts?
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, no, totally. I think there's actually kind of two questions in there, right? There's the beginner's question of he's actually saying, what system should I use, right? And that implies some sort of technical system or whatever. But then if you take it a little bit deeper, it could also mean, what works for me? What kind of catalyst should I be using? And that might not be a chart pattern. Maybe you're trading the cocoa market and you know something about the companies in the cocoa market, and you'll use that as a trading catalyst and not necessarily what's on the chart. So I think a couple of things to consider there. Obviously, charts are good and we like charts. We both like charts, and most people trade with that. But what are some other catalysts that you could look at maybe? That's that's more in the futures and stock market maybe, but FX has some of those types of catalysts. Also, like I know you look at the retail traders, right? Their ratios and stuff like that. So that might be another catalyst that he can look at. So just something to think about there.
Yeah. There's lots of triggers, aren't there? Yeah, for sure. Yeah. So it really, like, I guess I just want people to get away from this idea of like there's a best pattern or whatever. It's really about what matches up with you. Yeah.
Yeah, totally. Yeah.
Cool.
Okay, cool. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this is a big time of change, obviously. This last year and this coming year is going to be probably even more change. So what can people do to kind of weather the change and kind of roll with the punches and even benefit from the situation?
I'll tell you one thing I've learned. I think people sometimes confuse fear as, they give it like a negative. So like, for example, if I grow up in a country like Australia, where predominantly, I noticed this when I came to Australia, that like all the people, when you get off the plane at the airport, like everyone looks like they're all from England. They're all these white faces. And that was so different to me growing up in the United States, in particular in California, where, I had black friends, Mexican friends, you know what I mean? Like I had friends from Taiwan, was a good friend growing up. Lots of friends from Mexico, of course. I had friends from Japan. I had friends, like from, everywhere, Guatemala. I had a really good friend from Guatemala in college. And so, yeah, it was like if I took someone out of Australia and dropped them off in the middle of like Angola, where they're going to stick out, right?
Yeah.
That can be scary. But why? Why are you scared? Do you like if I just pluck someone out of Sydney airport and I said, okay, we're going to Angola, and I dropped them off in Angola, and they're like, whoa, they would probably be fearful. But why? They don't probably know anything about Angola. Maybe they didn't even know it was a country. They never heard the name. But yet here they are, and they look different, and they're fearful. And I think that's really what gets at the core of fear, is the unknown, right? So we don't know about something, and we have to confront it. So what do we do? And so I think fear, in a way, is like a sign that you're in a spot, you're in a place where it's very exciting. Like it's exciting. Think about it. Most of our lives, what we do is so normalized. And so, you get on the bus at the same time, or you get in your car at the same time, you go to work at the same time, you go to the same cafe, you have lunch with the same people, or what, you know what I mean? Like so much of it. And I know like it's not always the case for everyone. Like you might have a meeting over here or a meeting over there. You might have a business trip or whatever. But the point is, most of what we do is just so normal. So when you're fearful, to me, that's like a sign that you're alive and that the unknown is there. And that should be exciting. So really, I think we misinterpret excitement over the unknown as fear.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Because we don't know what's going to happen. We like it when we know what's going to happen. We know what is likely to happen. So I've learned, and I think this really applies to trading. In fact, one of the things FX Street was asking me about this like a couple years ago. What do you like? I think it was New Year's resolutions, and they asked a bunch of people on there, and I said, because I do webinars there, like I just do once a month now. But and they said, what are you working on in the new year? And I said, I really wanted to work on this idea of fear and of embracing the unknown, because that's what we do as traders, right? You and I, we risk our money, we put it down, and we say, I don't know what's going to happen here, but I believe enough in my data, in my testing, I have enough confidence behind it that I'm going to risk my money because I think there's a good chance that X is going to happen and X is good for me, right?
Yeah.
And so I think fear, you can kind of twist it in your head and look at it, flip it around, look at it as an excitement for what's to come, the unknown that's to come. And that can be another opportunity to learn something. That could be another opportunity to see something about yourself that you hadn't seen, like a facet of yourself, whatever. So that's why I think we should sort of reorganize how we view fear as something exciting, not as something so problematic or, dark or, negative.
Yeah.
But rather interpret it as something, it's really kind of excitement. It's excitement that we're interpreting in a negative way. What are your thoughts on that?
Yeah, no, I totally agree. I think that in reality, there aren't too many things that can really harm you. I think, it's just an opportunity to grow. And I think, especially in this environment, there's a lot of opportunities to make money, in trading or whatever you're going to do. And I think if you just calm down and just objectively see the situation and say, okay, this is going to go away, but then maybe this is going to come up, and that's an opportunity, and this is an opportunity to do this, then I think it becomes much more interesting and a lot less scary.
Yeah, and that's why, I think the downside is you can get addicted to that, like base jumpers,
Yeah.
or NFL football players love running into people, or what, you know what I mean? Like there are a lot of big wave surfers. Like there are ways, I think, where you can kind of take it to the extreme. Gamblers also.
Yeah.
Right. So that's important for traders to recognize that a certain proportion of traders are actually gamblers. And I would say Jesse Livermore's would fit into that category. You guys can look him up. We can put it in the show notes. You can look up the Reminiscences of a Stock Operator, which is a biography of Jesse Livermore. But yeah, so it is tricky. There's that balance of embracing fear versus getting addicted to that feeling of overcoming the long odds of jumping off a building with just a squirrel suit and a parachute or whatever. You know what I mean? Like, yeah. So it's a bit tricky, certainly. Yeah.
Yeah. You definitely got to know the odds or whatever, right? And your own skill level. But
that's right. And that's where the simulator comes in for traders, right? Exactly. Yeah.
Totally. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Try and think long term. Try and think really far away. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter. So if some people don't know this, most people are basically not born to trade, right? Probably 99.9%. How can we first understand that and then use that to become a good trader?
Okay, this is a great question, and I appreciate it. You know what I would say is there's an app, and I will try and put it in the show notes for those of you watching this. And this is your lucky day because you're going to get a cool app.